Good morning, everyone, and welcome to another episode of Bitcoin Magazine Live. Good afternoon and good evening to all you other fuckers. It's the morning in LA. I've been up too early, so it's a good morning type of day. What is up? I am your host Q, coming to you yet again from my mother's basement, and I am joined by my co-host P. How goes it in your underground bunker?
It goes fantastically well. The colors, like yesterday, are the same: red, red, and then blue. It's calming me, even though I'm confined to a space of about 3 feet by 3 feet, eating dog food. You know, I do what I can. There's a lot to talk about today, Q. Let's dive into it.
I just gotta say, I don't know why, but your microphone just looks fake.
Yeah, I know. It's the worst fucking color ever. I rant about it all the time. I'm like, this, I mean, there's a reason it's called an elephant dick in Germany. Because that's exactly what it looks like. Like, why the fuck didn't I get the black one? So it would just fade into the background.
I mean, that would probably be a good thing. Or anyway, sorry. It stood out to me as I was staring at your elephant dick on screen. But as P mentioned, we got a jam-packed episode for all of you. We're going to kick things off in just a moment with some news and notes. We have an exciting interview segment with John Ficori and Ben Prentice joining us to talk all things macro, the Fed, recession, GDP, yada yada yada, etc., 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 dots, whatever. And then, of course, we got Jimmy Song joining us for the last hour of the show, and we're going to wrap with him about whatever the fuck we feel like, because it's our show and it's our day. Let's kick it off with news and notes. I don't want to spend too much time on it. We're not going to take a victory lap here. I'm just simply going to say there is one show remaining that is going to be your daily live news broadcasting show because, you know, we got them diamond hands. We don't capitulate, and we only focus on Bitcoin content. So Bitcoin Magazine Live, as of next week, will be the only daily live news show that is that any Bitcoiner does. So
No. I mean, there are many of them. People do their own daily live shows, but we are the largest and the best, bringing the news to you where you most need it, while you're pooping or eating cheese.
definitely the largest because size matters. Size matters no matter what she says. Size matters.
That's true.
All right. That's about it on news and notes then. I kid. So for anyone who's been, I don't know, somehow cleansed from the internet for the last 24 hours, for anyone who has been living under a rock, the Fed did confirm another 75 basis point rate hike as of yesterday. In addition to that, we still have no clear definition from the people who are in charge of both the US and global economy. As of this morning, we did get the official reading of Q2 GDP numbers that came in at negative 0.9%. This is 2 negative quarters of GDP with negative 1.6 reading in Q1, negative 0.9 reading in Q2. And checking my textbook definition, because Jerome Powell likes to use the textbook definition of things, two successive quarters of negative GDP growth equals recession. It's in the textbook, man. I'm helping you.
Not only that, but the Financial Times, they don't even put the in front of it, published an article, U.S. enters technical recession after contraction in second quarter growth. I mean, that's all she wrote. But not.
I've said it, so it must be true.
Exactly. But not according to the White House.
Definitely not according to the White House. And look, we'll dive into all of this when we have our guests on. So I don't want to spend too much time here in news and notes going over it. I do have a theory, however, on what constitutes a recession. And I'm just saying, I was unemployed
Holy shit.
in 2020.
Wait.
What?
Oh my God. That little screenshot that we just showed, shortly after it was published, Financial Times changed the fucking headline to U.S. economy shrinks for second quarter in a row.
Oh, yeah, I wonder who gave them a call.
They edited the fucking headline. All right.
I also want to make note, Wikipedia also in the last 48 hours has done 38 changes to the recession Wikipedia page, trying to change the definition as well.
It's fucking infuriating. We're going to talk about it in half an hour. So let's hold the fury, bottle it up, keep it inside, swallow it, and we'll let it all spew in a bit.
But before we do that, let's show the White House press secretary squirming at the podium yesterday.
Roll clip.
Where we are today.
If things are going so great, though, then why is it the White House officials are trying to redefine recession?
No, we're not redefining recession.
If we all understand a recession to be 2 consecutive quarters of negative GDP growth in a row, and then you have White House officials come up here to say, no, that's not what a recession is. It's something else. How is that not redefining recession?
Because that's not the definition. That is not the definition.
Brian Deese said in 2008, of course, economists have a technical definition, which is of a recession, which is 2 consecutive quarters of negative growth.
I can tell you this.
Yesterday he said 2 negative quarters of GDP growth is not the technical definition of a recession.
It is
What
not.
changed?
It is not.
Why did he say that
it
was?
is not.
What's the
I can
difference other
speak
than who
to
the president is?
I can speak to what he said yesterday in front of all of you, which is the last thing that you just repeated. There are many factors. There are many factors, economic factors and indicators to consider, and I will say that the textbook definition of recession is not 2 negative quarters of GDP. We have a strong labor market. We have business.
I was about to go run and get my textbook just to like hold it in front of the camera and just explain to her that in this textbook that the George Washington University says is a viable thing for students in Econ 101, Introduction to Finance, and countless other courses find acceptable. This textbook does define recession as 2 successive quarters of negative GDP growth. I'm just, we need to move on to the next story. Otherwise, I'm just going to keep us here for the next 3 hours.
Let's do it.
So, NBER. So we actually talked about this last week, P. If you recall, this is that group of 7 economists that I pointed out, like they are actually the deciding factor of a recession. And
the Council of Elders.
Not to move goalposts here. They've actually been sort of entrusted with this since 1979. So this has actually been a group doing this exact thing for some time. But what people don't, I think, understand is what the phrase technical recession means. They're not saying recession. Technical analysis, technical recession means based on the numbers, based on the charts. That is what it reads. That may not necessarily be full-blown recession. Fun fact, there's never been a recession that didn't have 2 negative quarters of GDP growth. But technically, and not the technical recession, just technically speaking here, this group gets to decide because Jimmy Carter was like, I should take the power out of the market's hands and give it to a bunch of my friends to let them decide whether or not they know what's up. And mind you, say what you want about Jimmy Carter, like upstanding human being and individual. As a president, not so much.
Dude, did you just drop that you knew Jimmy Carter on a one-on-one basis?
Yeah. Uncle Jimmy? No. Look, this is frustrating because I think this is also in part a little bit of mainstream media like misrepresenting some facts. And I think it's really important for us to be honest that the NBER has been around and has had its powers since the late 70s. And the powers being that they get to determine and decide what a recession is when we look back retroactively. But looking back retroactively doesn't solve problems. It doesn't help us in the present moment. It does not help us understand where the pressure points are. Is this a demand side issue or is this a supply side issue? We'll dissect all of these again later on. I just want to, again, continue to pound the drum that a technical recession and a recession are literally 2 different things. And we need to know that. And we need to understand that when they change the definition of a technical recession, that's when the problem is. So I don't know if either of you have anything more you guys want to talk on here.
You've clearly got a lot of emotional baggage around this. I feel like I should hold up like a textbook definition of recession and be like, show me on this textbook definition where they touched you.
I think John's going to have some great commentary on it later in the episode, and definitely Ben Prentice as well. So I think we can table it for now.
Let's
I'm
keep.
sure. Well, go ahead.
Let's keep it rolling. I want to talk about Dick Durbin. I want to talk about Dick Durbin.
Do it.
Dick Durbin, Tina Smith, Elizabeth Warren call Fidelity's Bitcoin retirement plan immensely troubling, quote unquote. Fuck these people. He tweeted out, "We should all agree that workplace retirement accounts are no place to gamble. Yet Fidelity, one of the largest 401k providers, wants to give plan sponsors the ability to expose plan participants to Bitcoin, a highly volatile and unregulated digital asset. I am joining my colleagues, Senator Warren and Senator Tina Smith, in sounding the alarm on this risky pursuit." Dick Durbin can go fuck himself. What? I mean, we shouldn't be surprised, but
If you want to find out the signal versus the noise, look at the comments, and he was getting ratioed at the wazoo, meaning that so many people were commenting that, like, who is it the government to decide what I do with my 401k money? There's already so many restrictions on 401ks as it is in terms of what index funds, what mutual funds, what things you can invest in. They just want further regulatory vice grips on your money that you can do. And this is not financial advice. Well, let it be.
No, fuck it. This is financial advice. I mean, like, there's that great clip of Christine Lagarde from earlier. I think it was earlier in this year, maybe late last year, maybe even the year before that, basically saying, like, here's the problem. We can't let people escape from financial hegemony. We have to basically block all the exits. Like, that's all they're trying to do here, which is insane that anyone in their right mind would be willing to accept that. But that's what's going on. They're trying to create financial systems that prevent everyone from being able to do whatever they want with their money. They're basically telling you to go fuck yourself.
Yeah, and so he posted that last night. He got ratioed so hard. I'll add one thing and let Q comment. We wish Dick Durbin nothing but a quick recovery. Apparently came down with COVID earlier this morning. So I don't know if that's his way of scapegoating and getting off Twitter while his mentions are blowing up for a week. But yeah, he apparently came down with COVID. Wish him nothing but a speedy recovery. I hope that COVID clears his mind when he recovers to say, I was wrong. I have clarity. Bitcoin is good.
Just in case you guys don't know where Dick Durbin's from, he is from the state of Illinois, which, fun fact, has legalized online sports betting. So, no, you cannot invest your hard-earned money in Bitcoin in your tax-exempt 401k out of fear that possibly the gains of Bitcoin will be so insane that you may... Like, I want to break this down for a second, because in his own fucking state, I can go buy any or use any of these fucking sports betting apps and go ape into whoever I think is going to win or who's going to hit a home run tonight. But if I genuinely want to store my wealth in Bitcoin, in this tax exempt account, if you will, and if we're even 1% right about Bitcoin, and Bitcoin reaches values that include 2 commas, possibly even more than 7 digits to the left of the first decimal or the decimal point. Like, to me, this just reads like politicians just want to get paid taxes on these gains. Politicians are afraid that if more and more people have access to Bitcoin, more and more people will learn about Bitcoin. It's because of these idiots that we're in this position. It's because of their poor decision making. It's because of their poor logic. It's because they don't know what the fuck they're doing, but we just believe that because they were loud and famous enough that they are, and they know what they're doing, when in actuality, if we take that power away from them and we spend the time ourselves learning how to do these things and what the importance of money is, both societally and culturally, you introduce a completely different relationship to money. And as a result, you don't accept their bullshit. And you guys know how I feel about this type of stuff. Like, I hate the fact that accredited investors still have like a dollar amount that qualifies you to be an accredited investor. And yet again, I can go just drive 4 hours to Vegas and just fucking bet on black because I feel like it. Like,
I think what you're trying to say is that Senator Durbin of Illinois is trying to fuck you with his Fiat dick.
I mean,
As his first name implies.
as his first name implies, the dude's a dick. And I mean, it's just. Anyways,
All right.
let's go.
I got
I wanna-
one more thing to add.
Go for it.
One more thing to add, and I do want to bring up this next story because this is, in my
Yeah.
opinion, actually the bigger story from today.
Yeah, I'll hit this real quick. I mean, Brad Sherman, there's a clip of him. I know he's the congressman from California. He just got reelected, unfortunately. But basically, I remember there's a great clip. He's like, I prefer people invest in their 401ks in the state of California or the California lottery. It's like, is that sound investment advice? He's like, I don't want to let you invest. I want you to stay in the California lottery system. It's like, can you just say it more blatantly? Like, I'd rather you just mail checks to me instead of actually investing.
Yeah,
In the future.
this is exactly what I was gonna harp on. It is disgusting to me that states promote the lottery. It is fucking ridiculous that a state basically can have a revenue stream that is so clearly built to extract money from the people who need it the most. I was in a store the other day and I saw someone like furiously buying like little scratchers and, like basically spending like, 40, 45 bucks to buy all these little scratch off things. They were convinced that they were going to strike it rich, and that's never going to fucking happen. The idea that these people can promote these gigantic revenue streams, because that's what lottos and lotteries are. State lotteries bring in a ton of fucking revenue, and that's why they're legal. That's why they're okay. Even states where you are not allowed to gamble, the state basically, or like, it's limited, like online sports betting, things like that. A lot of states like that will still have online or rather lotteries because, and the reason that that's okay is because it is state sanctioned to give them your money. Do not fuck around with lotteries. The odds are insanely bad. You are never going to get rich by playing the lotto. Buy Bitcoin instead.
Oh, I fully endorse and support everything that P has said, with the one exception that there was one moment in lottery history where actually buying one lottery ticket was deemed a sound investment based on the probability of winning and the potential payout. And that was when you had that like record, like $1 billion lotto prize. That was the only time where you actually could calculate out and justifiably say, based on the odds and likelihood of winning, but with the potential payout, this is actually a sound investment. That one time in the entire history of the fucking lottery. So yeah, that's it. I don't want to talk about this anymore. I got the final word on it. Haha, I win, you lose.
Sounds like some bullshit.
What is a developing story? This has not passed, so I want to be perfectly clear. This act has not actually passed, but the Inflation Reduction Act of 2022 seems to have moved forward now that Senator Joe Manchin out of West Virginia has sided with the Democrats. This leaves only the senator out of Arizona, Kristen Sinema, as the final vote for the Democrats to get this bill pushed through the Senate. I want to first highlight some key points that have been taken out of this bill. So these are things that are no longer on the table, not an option, will not get passed through. Universal pre-K and childcare, free community college, expanded Medicare benefits, closing the Medicaid gap, home care for the elderly and disabled. Holy fuck, those are actually things that I genuinely believe are important. Child tax credits, I don't actually give a fuck about that. If you choose to have a kid, that's on you. New investments in affordable housing, as well as taxes on ultra-rich investors to pay for it all. So none of those things that I've just listed are in this bill. They've all been stricken, all been taken out. What is in this now $739 billion bill? A 15% corporate minimum tax. That's going to run them no, that's not right. Prescription drug reform, IRS tax enforcement, closed carried interest loophole. So those four things are supposed to give them $739 billion in revenue. what are they going to spend money on? It's going to cost us $433 billion for energy and climate, which is going to be $369 billion. And then Affordable Care Act subsidies, another $64 billion, notably a 3-year extension up from 2 in the last deal. This takes it past the 2024 election. Look, this is a drop in the bucket when you compare it to things like the Build Back Better plan or the $2 trillion bill that passed the House last year. To be honest, this doesn't really solve anything. Like, the energy concessions here are not focused on creating new oil pipelines. They're focused on creating new, quote unquote, renewable energy outlets, which may be viable investments. However, like, that doesn't solve our energy crisis today. That only prolongs our ongoing issue. I just have to comment on this. Spawn the Bitcoin overlord. Don't be jealous of my flow. My flow is fucking amazing, and I'll never cut my hair. Like, go take some whatever medications you need to take to grow hair, you bald fuck. Yeah, I leave it to you guys, because the main things that this bill is essentially going to spend money on is, quote unquote, energy and climate, and then this Affordable Care Act subsidies. I listed off a lot of things that personally I'd rather see this money going towards that are no longer in this bill. I may not be the minority. I may be the minority in feeling that way, but I think it's worth pointing out.
Yeah, P, anything you want to add there?
No, go for it.
I think one of the things that's very concerning is 2 things that stood out to me. One was the 50% corporate minimum tax. So obviously, different businesses have different tax amounts. I know some of them legally avoid taxes by basically reinvesting in their business. I know Apple's, famous for this. I think it was called the Ireland tax rule, where basically they set up like a corporation in Ireland, and they're kind of funneling money through Ireland, and then they're also using business expenses to write off revenue gains. Which with a 15% corporate minimum tax, not only does this affect the United States trying to tax businesses at least 15%, where do you think that money is going to go? The businesses are still not going to pay that. They're just going to raise the rates of their goods 15%, or whatever the difference is between what they currently pay to the 15% that they will be paying. So this is only going to hurt the poor, middle class, or basically consumers of these products. So at the end of the day, while they go to tax businesses are not going to be like, yeah, dude, we're just going to take the cost, no big deal. They're going to push the taxes onto the customers. So that really sucks. The other thing is that this says corporate minimum tax for US. They're trying to push this globally. I'm not going to put on my tinfoil hat and say it's a globalist thing, but they're trying to force other jurisdictions, as in other countries and sovereign nations, to also enforce 15% minimum tax. If they don't, they're threatening to do sanctions, and or like if you're an Irish company or somewhere from Europe or Asia or wherever, I could see them putting tariffs at 15% of the goods that come in to try and hit them with it. The other thing is the IRS enforcement. They're planning to bring in $124 billion in revenue. The IRS is already strapped as it is. So that means, I know that there was a push to try and hire, I think it was like 80,000 new IRS agents, or it was some absurd amount of IRS agents to go after not just businesses, but the layperson. Oh, you thought you were getting a tax return? I can definitely see them being like, oh no, you filed this wrong. Oh no, you spent this kind of money. So at the end of the day, while this looks like it's trying to generate revenue for the government in order to help people, I really think this is going to hurt the middle and lower class. I don't know. Over to P and Q. Anything you guys have to add?
Can I chime in real quick, P?
Yeah, go ahead.
So I do agree that unfortunately where this is going to get passed on to is the consumer. No corporation is just like, oh, I got to pay more in taxes. Okay, whatever. We'll take the hit on our bottom line. I agree with you on that notion, but I want to separate that side of the argument from the loophole that American businesses have taken advantage of for so long. And it's the Irish loophole that you pointed out. There is such a low corporate tax rate over there that it actually incentivizes these businesses to set up a almost shell corporation in this jurisdiction while they essentially maintain and operate an American run business, and they do it strictly under the guise of avoiding taxes. I'm sorry, but like, fuck off. No, that's not acceptable business practice. That's taking advantage of a loophole. That doesn't help Ireland's economy. It's not pushing forward innovation in Ireland, which it was, in my opinion, designed to do. It is instead being taken advantage of by businesses that can't afford the right lawyers and accountants and enough money to essentially set up this shell company to essentially operate with just enough operational capacity to allow them to qualify for these discounts and loopholes. Like, those discounts and loopholes should be given to small businesses, to the individual business owners who maintain a business that, you know, they're not making $1 million a year. Maybe they're making a solid 6 figures, and like that's how this business operates. And that's enough for the family that runs it and that's run it for a generation or two. Like, those are the companies that need these types of loopholes. However, they're not given them. And the reason they're not given them is because they also can't afford the lobbyists who whisper in these politicians' ears, hey, under no circumstances can you get rid of this high-risk loophole. Otherwise, you won't get the same campaign financing from Apple next year. You just won't. For the next election cycle, Apple will cut their donations in half. Like, let's not be naive about it. That is a conversation that genuinely has happened over the course of the last 2 years. I'm pulling it out of my ass. I do not have a source. I'm just telling you, let's think this through logically here. That's the conclusion that I can draw. So while I do think raising taxes is stupid, I do not think the government is the best allocator of funds. I do think that this is a benefit in the eyes of, at least let's get rid of these types of loopholes that the big businesses can take advantage of and continue to funnel money into keeping that loophole for themselves. How this will then trickle down into smaller businesses, mom and pop type businesses, and small business owners, that's where we should be concerned. That's where my concern lies. And I could give a fuck about Apple not having to pay 15% in taxes.
Yeah, Pete, anything else you want to add before we cut to a commercial break and bring in our guests?
No, man. You nailed it. Fuck these people.
Right.
Chris, do you have a rebuttal? Ugh.
No, I think I see where you're coming from. It's definitely like a regulatory moat that they take advantage of with exactly what you said. They have high-powered lawyers. They set up this shell corporation that's in Ireland. I believe it's 0% tax. So basically what they set up is a PO box. They hire one Irish dude. He like sits at a desk. I don't know what he does.
Wait. I think it's important to acknowledge, like, these businesses should absolutely be doing that. It's like anyone's right to basically arbitrage against these situations. I think the mistake is basically trying to leverage the narrative that people have around, like, fuck corporations, and then basically using that in an attempt to refocus people's energy from the things that it actually should be focused on to bullshit. Like, I think corporations should pay some tax, but I think that it gets blown way out of proportion, and I think that it's mostly just a political talking point.
You're absolutely right, and I will continue to say I do not think that as a result the government is the best capital allocator. Where my issue lies is when a business like Amazon gets tax rebates while I am still fucking paying my taxes. That's where my issue lies.
Yeah, I mean, but the problem there is, like, figure out how to fix consumer taxes, not do all this hand-waving bullshit and basically make a big show of, like, taxing the rich or taxing the corporations. Like, the problem isn't, like, tax, in my opinion, it's not tax them more, it's tax us less. Yeah.
Just tax us less. Like, don't worry about corporate tax rates. Just tax me less. Literally. Just Q. Tell you what, Elizabeth Warren, Dick Durbin, anyone else who's an asshole,
this is what it takes
Mitch
to buy
McConnell, Nancy Pelosi. I will personally endorse all of you if you simply lower my tax rate.
You piece of shit.
Well,
all right.
My vote is for sale.
All right. On that note, let's cut the commercial break. We will be back in a moment with Ben Prentice and John Thackeray, and it's going to be fucking amazing. Let's go.
Buy your tickets at Bitcoin Amsterdam. Use promo code BMLive. Oh, okay.
You are listening to Bitcoin Magazine Live. Listening to Bitcoin Magazine Live. Number one Bitcoin Magazine Live. You are listening to Bitcoin Magazine Live. Listening to Bitcoin Magazine Live. Number one Bitcoin Magazine Live. Samba.
What's up for like the fourth time now, guys? Thank you for sticking through the commercial break, my beautiful face, the commercial, my beautiful face, and then the commercial again. We are now joined by none other than our guests for today. Pete, do you want to give the proper introductions and this time pronounce everyone's names properly?
No, I refuse to pronounce the names properly. We've got friend of the show, Ben Prentice, who is the creator of the incredible website, What the Fuck Happened in 1971. If you haven't seen it, where the fuck have you been? Go check it out immediately. He has many other accomplishments, but I will let him tell us what those are. John pronounced Fakori, not Fakori or Fajiji or any other horrible pronunciation, which I've done. We've known each other for a while. John has the dubious honor of being the person who helped me ascend to the whatever the fuck I am right now. We became friends on Clubhouse, and he decided that I was cool. That is the sum total of your accomplishments, John. He's also the CEO of an IT company and a bunch of other awesome shit. John, Ben, welcome to the stage.
Yo, what's going on? Do we have John or not?
What's
John.
up, Pete? You guys hear me?
Yeah, we got
yes,
you.
we can.
Yes, 1 for 3, baby. Let's go. I was gonna pronounce Pe, our host, and thank him for having us. But
Hey,
I'm
did you
glad
guys
that
not
didn't
get the
lost.
memo? Where's your beefsteak hats? I thought we were.
You know what, dude? I have a
Oh,
pink
yeah.
one, and I probably had I known there was a beefsteak memo going on, I would have rocked it. Actually, the funny thing is, I was wearing this accidentally, and this just happened to be a
Nice.
Bitcoin hat.
So
I don't do hats anymore. Sorry, Ben.
If I had
Yeah,
hair
like-
like you, I wouldn't do hats either, dude.
Gotta let the flow rock, baby. While I got the flow, it's here to be rocked
Some
out.
of us don't have enough of it, so if we had as much as you, we'd be rocking the hair, dog.
you look glorious. Did I pronounce your last name correctly, finally?
Yeah, but you've done it. Like the funny thing is, and I don't know why you
Uh-huh.
give yourself so much trouble when we're just shooting the shit or we're talking and my last name comes up, you don't actually like have this, anxiety attack right before you go to pronounce my name, and it's just hilarious because like only when you do it on like public forums do you go like Fakari or
It's true.
Fakari, but he
It's
says
true. I
Fakari
see
just fine normally. Yeah.
I see Fakori and I trip up. I'm like, wait, maybe it's pronounced Smith. I don't fucking know. Who am I? And every time. But I appreciate your patience. I also did a terrible introduction for you. Can you please tell the people who you are from the perspective of a full-time baller? Please lie as well. Inflate your accomplishments.
I'm a full-time Bitcoin dad and a part-time CEO, early stage investor, life liver, Bitcoin obsessor. I think that tackles it. Yeah. Oh, now I built the Bitcoin product too. So that's what I'm most proud of, actually. We built the SAT Setups card, teamed up with our friends at Get Village, have the first college savings program. Sorry for the show. Bitcoin exposed college savings plan. So check out Get Village and SAT Setups. It's how I bribe my kids to do chores effectively.
Yeah, that's dope though. And as much as we love to, prop up businesses that are utilizing Bitcoin and especially helping onboard more Bitcoiners, I don't give a fuck about talking about any of that today, John. Quite frankly, I choose blood and I want to continue our arguments from spaces last night.
Let's get into it.
So in case the audience was not here at the very beginning of the show where we went over these quick little facts. Fed raised rates 75 basis points. We have officially gotten our second consecutive quarter of negative GDP growth, and none of the adults in the room seem to be able to define what the fuck a recession is. So I want to start with the last one because Holy fuck. Like, we even brought up a story from the Financial Times this morning that, thank you, P, for screenshotting the title. That was only then changed from saying US enters technical recession to US has negative GDP growth. So, what's going on here, guys? Ben, who did you piss off? Why are they changing the rules? And why can't any of these adults fucking just say or define a recession?
It's all a confidence game anyway, right? Markets are confidence games, and you know, as we kind of talked about last time, Snyder's work, who I know John's a fan of as well, kind of elucidates that the Fed really, a lot of what they do is just kind of posturing for markets. So you know, saying recession out loud is really a dirty word. So they're going to avoid saying it as much as they can. I'm not an expert on this stuff. I don't know what the definition is, but like it's clear that we're in some kind of downturn. So that's what I say, and that's where we are right now. But you know, Fed Jerome Powell came out and he said that he kind of said we're ready to pivot if we have to in markets like that, and you know, their proof is in the pudding. We're in a little kind of bear rally here, I guess, right?
So, we're not going to try to call bottoms. None of this is investing advice. But Ben, do you think this is like a pure bear rally with another leg lower, or do you think that, you know, a potential intermediate bottom is in for the time being?
Yeah, I mean, I definitely yield to John and stuff like this. He follows these things more closely, but if you kind of zoom out a little bit, I don't think that that we're in like a fundamental state of our economy, of debt loads, amidst all this inflation and supply chain issues, energy issues, huge one. I don't see this being this softish landing. You either gonna get you know a little more inflation and markets kind of rallying, or you're gonna get more recession, and then you know the worry, like we talked about last time again, is that those downturn things can they can kind of cascade a little bit. So, you know, John always makes fun of me for like not calling which way it's going to go. But to be honest, like if I had to make a call, gun to my head, I don't think we've seen, you know, the worst of from equities and stuff like that. Unless something breaks quickly and Fed pivots very quickly, I still see us going down a little bit from here. And, you know, I focus on the long term anyway, so I'm not really worried about it too much. But you know, you never know when these things can get out of control.
You fucking bear.
John, you're awfully quiet.
You're not used to me listening is the only take. No, but so I tend to agree with a lot of what Ben just said. I don't think we learned anything new yesterday. I think there was some confirmation. So it was like another dot on the plot to be able to confirm where things are going. And I actually agree with Ben thinking that there isn't going to, you know, be a softish landing, even though I'll try to define it as I did in my tweet yesterday. I think what I learned yesterday was soft landing means getting inflation down and only having 6 or 7% unemployment, which historically, by the way, like a 6% unemployment rate is marked by typically, you know, good economic times. And it's been a good, you know, a number that is, you know, if you're below that number, you're in good shape. If you're above that number, you start getting bad shape. But the Fed does have the covet, and however you want to view the manipulation of labor participation force, which, you know, Jerome Powell actually acknowledged and said that he's been, you know, sort of surprised and disappointed that we haven't had much of an improvement in labor participation since January. You know, especially being on the other side of COVID to a large extent, lockdowns breaking up, people kind of going back to work. You haven't seen the participation, but here's the headline in my mind. Jerome Powell sort of wants a recession, like, and not that he wants it, but if he has to, like right now, like it's inflation is public enemy number one. And if he has to team up with public enemy number two to get public enemy number one, he'll do that. And so I think MacroAlf put out some really good data that showed, and I mentioned this in the spaces yesterday, Q, so I apologize for repeating this, but just in case for folks who weren't there, MacroAlf has shown 11 out of 11 times where we've had these sort of setups with inflation, anytime that we've gone into some inflationary setting, and we've kind of had a recession, ultimately it's taking care of the inflation. And so it winds up being sort of like this chemotherapy, if you will, for an inflationary pressure. And if you know, you believe what I do and a lot of others do, and if you're listening and believe Jerome Powell to a large extent, like the Fed is focused on inflation. And if that's the case, then they're totally fine, or at least they've been setting up the language, and I'll read it here in a second, that they expect job losses and they sort of want job losses because they know those job losses mean that they'll be able to get headline inflation back under control. So I tend to agree with you, Ben. I think that we're likely that this is probably a bear rally. This probably lasts for 45, 60, 90 days. I don't know, by the way, but that's just what my gut tells me. And that we still have some new lows to see in equity markets and possibly more corrections to see in things like real estate.
I want to really spend some time, I think, unpacking inflation with you guys, if you'll entertain me for this, because like inflation can be caused by a lot of things, and we've been told a lot of different things are the cause of it. But if we really actually go to like the textbook definition, because people seem to be debating all these fucking textbook definitions, there are two things that will drive inflation in prices: supply and demand. And either of these things can be adjusted and turn to cause inflation. I sit on the camp that definitely believes that a majority of the cause is demand. However, there is some issue that supply has caused, a diminishing amount of supply with COVID lockdowns and all these factories all around the world getting shut down, supply chains getting log jammed. You had that fucking, what's it called? That one boat that stopped the Suez Canal, I believe it was, that like stopped any shipments for like a 72-hour window. You have these little pockets of issues in the supply side of things, but then you have so many things in demand. I will put a number on it saying I think it's 75% demand, 25% supply side. I'm curious from the three of you, sort of, how would you weigh what's causing inflation between supply and demand here?
That's a good question. It's really hard to do too, right? Because like you kind of alluded to at the beginning there, people like Milton Friedman only define inflation by an increase in the monetary supply. And monetary supply is really hard to track now. Base money doesn't really mean anything. How do you even track that? And I think there's a lot of confusion about QE versus deficit spending. It's hard for me to say which one it would be because again, it's hard to even see the data for those things. But what I would say is that I think the monetary inflation from some of the spending from COVID took it. Sees that when you print a bunch of money through deficit spending, it takes a while for that to kind of ooze out into the economy. And I think more of what we've seen in 2022 is part of that monetary inflation. I think initially what we saw in 2020 and 2021, when things really started heating up, I think a lot of that was the supply chain personally. But I don't have hard data on this stuff. And really, I'm kind of just speculating. I do think it's both, but I think it's probably more of the supply issue from what I've seen. Especially going into the war and oil and stuff like that. But it's tough too because 1971, if you look at oil prices, they spiked right in 1971. I don't see that's a coincidence. I think when when the printers do get turned on, people go to things that they know they'll need, like oil. So again, very hard to discern these things. But I'm curious to know what John will say.
No, I largely agree with you, Ben. I think sort of when you look at things and reasons why things happen in life, like there's typically a regression, right? There's contributing factors in different ways. And I think that's what Q is getting to. And what I would say is that like, I largely think, when people think about inflation and they think about it as a monetary phenomenon, Jeff Snyder talks about this, Friedman does, they talk about it as the expansion of money supply. But there are certain things that I think like, when you're reading and talking to just everyday folks, they're thinking things in terms of price inflation, right? Like they don't know what the money supply is. They just know what the price of their grocery bill is. They know what they paid at the pump. And you see that reflected in political polls right now. Like the number one issue in the upcoming election is inflation. The number two issue is price of oil. And so you could argue that's inflation in their minds, right? And so what I would tell you is it's impossible to ignore shutting down a world economy and understanding what type of bullwhip effects kind of happen through supply chains as a result. It's impossible to ignore a large oil supplier being in a geopolitical conflict with second and third order sanctions and financial impacts. Like, it's impossible to ignore those things. On the other end, it's also impossible to ignore and to section off the conversation that really is sort of real money printing. And I think this is what Ben was getting to in terms of people being confused about QE and like fiscal deficits. Like, there was really $9 trillion that got pumped into the economy at the same time as us shutting down the economy, right? So I've seen some few people in the chat talking about too much fiat chasing too good. That is the reality. And so understanding what percentage of that is which and what percentage of that is not is really difficult to see. But sort of what you're seeing now, and there's still effects on the supply chain, but you're starting to see the impacts in certain commodities right now, P and Q and Ben. Like, you're seeing a cratering in oil, you're seeing a cratering in wheat, copper, right? Copper is a really significant bellwether as it just goes into so many products, et cetera. But it takes time for that, right? Like, the futures contracts on these things were bought months ago, right? And like, so I would tell you that, like, I think, Q, your kind of framing of this is one that I agree with. I don't know what that regression lines up to see, but I think the three things that I highlighted are impossible to ignore. We actually pumped $9 trillion. It had nothing to do with buying bonds and swapping assets in duration in form of QE. That was actually $9 trillion that, our Congress gave us. And then number two, you sort of have these geopolitical conflicts. And number three, we shut down an economy, like, globally. And there's real impacts to that in terms of what price you pay at a grocery store or at a gas station. And I think when we're talking about inflation, that's what most people are actually talking about. I don't think they're talking about base money supply, at least everyday Americans.
I think there's also another really interesting point, Ben, that you kind of bring up. It's like people flock to their necessities, but, like, let's be honest, you're not going to stop going to the grocery store to buying food. You might buy different brands, but you're still going to have to go buy food. You're still going to have to put gas in your car. Like, those aren't things that American families can just opt to say, like, no, I'm not going to buy that. It's going to be, no, we're not going to Disneyland this year. No, we're not going to go on that trip to see grandma and grandpa because we can't afford the plane tickets anymore. Those are the expenses that are going to get cut. But to John's point, like, American families just seat in the grocery store. Like, I told this story on Spaces, either Spaces or on the show yesterday, but the fact that my girlfriend and I celebrated that we filled up the car for less than $60 is filled up the gas tank of the car for less than $60. Like, I can't believe it. I'm genuinely celebrating 50% increases from the price of gas a year ago. Where is that breaking point? And I guess more specifically, like, is there a commodity in particular that's going to be that breaking point, either for individuals to really say, like, yo, shut the fuck up, we're in a recession, what are you going to do about it? Or for the government itself to finally reverse course and say, like, hey guys, like, we're in a recession. Sorry, we fucked up.
Yeah, I mean, I don't know what would make them admit we're in a recession or downturn, or whatever the hell you want to call it. It doesn't matter to me. I think to answer your question is we're already beyond that. John just said the number one thing is inflation, and the number two thing is inflation. So literally, this is the number one issue in the country. That's the point, right? We're already there. They have now charged the Fed, and this is a really good point that I hear John make all the time, and we have to shout out Joe Carlosara again. He's the man. Go follow Joe. I get a lot of this stuff kind of distilled from his talking points, but that people, I think people misunderstand a lot. I kind of got off track for a second here. What was I just talking about? In inflation, right? So I totally just lost what I was saying.
You're saying
We were talking about the
is
government reversing course a little bit and talking about, like, how they were defining whether or not, like, it isn't, like, if it's a recession or not a recession, and how much does that matter?
Right. And I think the point to take home here is that if people want to, so they've charged the Fed with getting rid of inflation, and we blame the Fed for inflation. But as John outlined earlier, the $9 trillion wasn't printed by the Fed. The Fed is a vehicle for that, between the Treasury and the Fed printing these bonds and things. And now we've charged the Fed with fixing the problem, and the Fed doesn't really have much ammo to fix that problem either. And so we're posturing to have this entity that doesn't have the tools to fix these things the way they want them to, with a problem that they didn't really start. It was Congress that started this, and then Congress started, and well, now you got to go fix it, right? That is a framing that I think a lot of Bitcoiners don't have. Yeah, not saying the Fed isn't a huge problem. The Fed is a massively big problem for some of these reasons that they have any influence at all. But that the $9 trillion was printed by us, but we voted for these things, by Congress, by whoever you want to blame for the legislation getting passed and the deficit spending happening. We've been doing deficit spending nonstop for 51 years or whatever, besides Clinton, I guess shout out to Clinton for running the only surplus or whatever. That deficit spending, that is the number one driver of monetary inflation. So that when we point to the Fed and blame all these things on the Fed, and then tell as a society, then tell the Fed they have to fix it. And I would argue that they don't have the tools to fix this, especially not in the way that we want them to, that soft landing. Again, they have to kind of say these things. They can't just shout recession. Oh yeah, 10 million people are going to lose their jobs tomorrow. If they say these things, then you get those other things that I warned about, these precipitous, kind of falls that are really sentiment correlated. So really, I think it behooves this. This is why I think I think I saw Marty Bent tweet recently, like, why are people so worried about Eurodollars and the Fed and stuff? To understand how the monetary system actually works really gives you a lot more ammo to criticize it and how we could make it better. Because I think just blaming the Fed for everything and then telling them that they should fix it is really fruitless endeavor.
Yeah, I couldn't agree more. And Q's about to kill you as much as he wanted to kill me yesterday. Q, I can't see you right now. I really want to be able to see you. Here's the thing. There's reality, and you can actually see it in the language yesterday. So if you read the transcript, what does Jerome Powell tell you, right? Well, what he tells you is we hope to get demand more in line with supply. Why? Because Jerome Powell can't increase energy supply. Jerome Powell can't, rewrite ESG policies. Jerome Powell can't go get the Saudis to pump more oil. Jerome Powell can't call Putin and tell him, hey, bro, a couple of months, man, can you chill out over there in Ukraine? Like, those aren't real conversations that can be had. And so what you have is a guy who has two mandates and one lever, sort of two levers, but one real effective lever. And by the way, the bond market isn't even believing it, right? The Fed's telling you, hey, we're gonna hike to like 3.8 or 4, and go look at the 10-year right now. Go look at the 30-year. Like, the bond market doesn't lie. And so one of the things that I think I've been frustrated about this recession or not, even though I called it in December, I did. Listen to Clubhouse back in December. As soon as I saw retail numbers in December, I said, oh man, the stimulus ran out. I don't know how long it was going to take, but unless we were continuing to print, and I'm talking about, when I say print, I mean the problem that Ben was just talking about. The people that we elect with 14% approval ratings and 90% reelection ratings, they spend a lot of money, regardless if they're right or left. And I know a lot of Bitcoiners hate hearing that, but it's the truth. And this is where I think where you and I kind of, Simon, like, we see the similar problem. And it's just like, who I think you're angry at is the wrong person, right? It's just like, you're just cheating with, right? Like, and so, assigning the proper blame here, I think, is important. And also trying to figure out who can actually fix this is also important. And so, like, the real issue here is understanding that the Fed, while not only in my mind didn't cause the problem, even though they're not part of the solution, doesn't, and this is where Ben's really key, doesn't have the tool to actually fix it. And so, like, the only thing they can do is, like, that's why I used that chemotherapy analogy earlier, is like, they have to destroy all parts of the body and just hope the body remains alive while they kill the cancer. And that's what this looks like. So all the language you heard yesterday from Jerome Powell, without being too much more long-winded, was, hey, we're going to try to do what we can to get demand in more in line with supply. They didn't talk about increasing supply to meet demand, right? And so what you also, kind of hear from him is, taking credit, sort of, right? Like, in a very clever and well, manufactured way, is like, we're seeing the effects of our policies working. We're seeing softening labor conditions. We're seeing some softening conditions in the real estate market, and he actually then says, and that is an effect of the interest rate rises, right? So like, he's telling you what he's trying to do, and he's telling you the only tool he has to use it. And he's saying, hey, by the way, this one tool is sort of working, and we're going to maybe lose some jobs in the process. And so, trying to prepare the American people for that, which, by the way, isn't his job, but ultimately I think is some of the evolution of like a more politically, charged Fed. But yeah, I totally agree with Ben on that. And Q, that's the key point, I think, and where sort of I'm trying to redirect your anger to a large extent.
Hold on, Q.
There
I
you
know you're ready to jump in on this. I just want to put a cap on what he said. I know, I can see it. I would want to put a cap on what he's saying. Okay, fiat money is still part of the problem, right? The political nature of fiat money is still really the main problem here. It's just pointing our guns at the Fed, I think, is misplaced. We can still point it at the people printing the money. It just happens to be Congress. Look at the deficit charts. That's adding new money supply, right? That is the money printing. You got to wrap your head around this, because we can still be mad at fiat money. We can still be mad at the politics around it. We should just point our anger in the correct place.
Yeah, I think you're absolutely right. And that is it's a very important point to make. The Fed is basically doing the best that it can with the shitty tools that it's been given.
I told you last time, Jerome Powell's my boy.
So
you guys are bros. But I mean, I love to talk about incentives, as we all do. But, it's like, if we were in the same positions with the same incentives, we would probably do exactly the same thing. His job is to ease this descent into, hopefully not financial apocalypse as much as possible. It's a valid point.
So I'm going to just say, you guys can read me like a book. I have the worst poker face of all. You're half right. And the part you guys are right on is that he has no control over the supply side. I fully agree that's not in the Fed's control.
Right.
However, I do not understand why this is so often overlooked. When COVID happened and the Fed initiated their response, part of their response plan was bond purchases of $120 billion a month that lasted for almost 2 years. 120 billion times 24 gives you $2.88 trillion. And that's not Congress that signed off on, let's print almost $3 trillion and inject it into the bond market. That was the Fed making that decision. So while I do agree that Congress injecting and increasing the monetary supply as a result of all of their different bullshit acts that didn't end up doing half the things that they set off to do, that also had a negative impact. To be honest, I'm actually more willing to stomach an attempt at helping the people than more of these fucking Wall Street jackasses in the bond departments of Morgan Stanley, Goldman Sachs, and wherever else to make them look like they made money so they can get their fucking bonuses. So that's where my anger.
You're not
really
wrong,
resides.
Q. You're not wrong about that. But I think it's important to kind of separate a couple of these things. So, does the Fed engage in QE, which is basically what you were referring to a minute ago? Absolutely. Most of its impact, in my opinion, and the opinion of a lot of others, Ben's and Joe Carlasari's and a bunch of other folks, is that it has mostly a psychological effect, right? And so part of what they're doing is focusing in on something that we know as the wealth effect. And so I agree. And I don't know how much Joe or Tina or some of the folks that kind of align with my thinking, assign to how much this inflates assets, but it typically, like, that has an impact on sort of equity markets, credit markets, and assets, right? So like, those things perhaps are why homes are more expensive, and perhaps why like hard, goods are more expensive, that sort of thing, right? And equities at, pre-correction at like 35x, forward earnings or something. Totally. I don't disagree with that. But when we're talking about CPI inflation, right, and what the conversation is with the Fed yesterday, it really has no impact on that. There isn't any real data that shows sort of the impact on CPI inflation, at least as QE, right? So when we're talking about the dollars that are chasing the goods that are making your grocery bill and fuel bill, and what I think most Americans are talking about, I think that's really what they're talking about. And I think there's a lot of times, I think, sort of confusion between the two in terms of QE being real dollars in the economy that flow into your grocery store to buy more oranges or some shit like that, right? And so I don't disagree with your take on that, Q, except for to say that like the Fed is focused, I think the Fed's largest tool is psychological, impact on the markets. And a lot of what I believe they were doing back in the COVID debacle was a function of like giving assurance to the market, right? Like part of the reason why Powell has to come out yesterday is to be effective in calming markets. And oh, by the way, even though he said we have a weakening economy, look what the market did yesterday. And it's partly because he gave assurance to the market. He basically gave them clarity. He kind of like didn't shake the bubble and didn't confuse them in any way. And so and kind of one last sort of tangential point is that what the impact of QE sort of has in some ways in boasting assets is something we refer to as the wealth effect. And so Americans tend to spend more when they feel more wealthy, right? So, even though you're on paper perhaps more wealthy because your home went up in value, you're not really paying attention to all of your neighbors' homes going up in value, but you feel richer. You look at your 401k account, or you look at your Schwab account, and you're like, oh shit, we're richer. And so you tend to go on, you upgrade your lifestyle, you buy a nicer car, you go on the extra vacation, you buy your wife some extra jewelry, whatever, right? You send your kids to nicer schools, whatever, right? And so, in effect, in as much the wealth effect kind of has a precipitous effect on sort of like consumer habits, like I can see that. And I think that's a lot of what the Fed was doing, but you're not wrong. I mean, there is an impact to QE. It just isn't what the rest of the country is talking about when they hear a 9.1%. In my mind, those bank tokens and this purchasing of bonds doesn't really have much of an impact on your grocery or fuel bill.
But it does have an impact on the money supply. Like that
sort of.
They are in essence printing money out of nowhere. They are the arbiters of what gets printed. Any bank that issues a loan, where are they going to get the money, quote unquote, printed from? They let the Fed know, hey, we issued this loan. We need to print X number of dollars because this loan is now out in the marketplace.
Well, Q, let me ask you this question, because it depends, I guess, depends on how you define money, right? Like, so a lot of what the Fed does, or when they say printing out of thin air, basically are bank reserves. And unless banks, we rely on the commercial banking system to actually get that money out into the real economy. And so, you and I, if, you come to Chicago and I go buy you a steak, I can't pay for that with bank reserves, right? So
totally.
Depending on how you define money. And so I would just tell you, I concede to you that what the Fed does with QE impacts certainly assets. And that is the most important thing, I think, in terms of breaking generational wealth, right? People that have assets get wealthy, people who don't. It's that simple. And so I can see that that's the real impact, and understanding that is actually a better understanding of assigning the cause and effect more appropriately, or perhaps the blame more on the money printing that Ben and I talk about in terms of fiscal deficit spending. But I would tell you, yeah, you're right, I think, about the QE and the impact it has toward, the impact it had on housing and real estate and the stock market over the last, number of years. But I don't think it impacts the way people think about, price inflation at the pump and the thing. So I really just want to try to draw that distinction. So I don't disagree. I think you're right about us being half right. And actually we agree on that. And I think you're right about that, but just as it relates to assets.
Okay.
Q's not used to me agreeing with him. He's like, wait, what do I do now? My brain is broken.
I'm like, fuck, where's the argument now? I don't know.
Conversation's over. We can all go back to the gym.
So I want to throw something else out there now, Ben, and not to interrupt you, but this is more directed to you. We have seen the Fed rinse and repeat this sort of system of let's inject liquidity into the market, let's decrease the Fed funds rate, and that initiates a new bull run off of whatever tiny or significant bear market that we have essentially seen since the 2007 financial crisis. And so those instances where you actually see liquidity injected into the markets, we've never seen inflation to this level. So that strengthens your argument and weakens mine that the Fed doing whatever they do has not had an impact. I would actually, however, almost counter to say those moments, in my opinion, actually in a weird way show the Fed can control both supply and demand, because they can artificially create market liquidity and take it out of the market as well, essentially pushing demand higher or lower. And in turn, almost directly, I guess it is technically indirectly, but as they fuck with demand, the supply systems will get fucked with. And then in turn, supply is now adjusted and so on and so forth. So yes, you can't directly say that they can impact supply, but I think they have shown that they think they can. And this feels to me more like a move and an attempt to
Well,
do
that's not what
exactly
Jerome
that.
Powell's telling you, though, right? Like, if
Yeah,
you
but
read,
Jerome Powell also is telling me that there's no recession. Jerome Powell also told me inflation was transitory a year ago. And like,
I know, but
now
why
it's
would he
like,
want to
well,
admit
I wanna
that
hear-
he has less power, I guess? But I want to hear Ben's take on
Yeah,
this,
exactly.
by the way.
Ben, what were you going to say?
Listen, if you really want to try to understand this system, we got to bring in like repo markets. We talk about asset swaps, bank reserves. How much do bank reserves matter, right? Like how are they used? What is their effect on the market? Let's talk about interest on excess reserves. Do we talk about that a lot, right? I think a lot of Bitcoiners just see QE number go up and they point to that and say it's money printing, and it's very easy to do. The real point, right? And I think kind of Q hit it on, I don't know if he knows that he did this. Q hit it on the head here, is it doesn't really matter, right? This is what we're talking about. The Fed is really destructive. It doesn't matter the mechanism that the Fed is actually doing unless you're trying to understand what's really happening. The point is that the Fed is influencing markets in either case. And that is destructive because we want free markets. We want people expressing their values, and we want price discovery to come back to reality, right? We want, and there's another big point here. We talked about assets. It's probably been outlined a million times in the show, but it's worth mentioning here again. We're talking about money supply. We're talking about increases in the money supply and how that mechanically works in the market. Well, part of the money supply is the fucking stock market, guys, right? So like, you want to talk about like the money supply itself, where we're adding liquidity to the stock market when we're in a bull run. We're taking liquidity out of the stock market so that affects the money supply too. So I don't know where we're trying to go with this, because to me, let's like, I like to focus on, how can we, again, if you want to go into these deep dives about how the monetary system works, I think it's really important to do. But what does it mean for us, I think is, a different question. And right now, we're faced with economy that has too much debt. The supply chains are definitely out of whack. We need energy investment. Americans are facing very high inflation, historically very high inflation, and we are at very low unemployment numbers, right? So, I mean, I would suggest that we should kind of take a step back for this conversation and focus like, well, what, instead of just arguing about how the Fed works, I don't think we're going to kind of resolve that here. So, where can we kind of take this conversation a little bit more focused?
First of all, I just want to jump in and say your cat is clearly furious about the current state of the United States economy.
Markets, yeah, it's tough.
I just wanted to say that I empathize with that cat.
Mm-hmm.
And I feel
A lot of
it.
people
Q, please continue.
I'm really sad that Ben doesn't think that four guys talking in their basements with no real economic, beyond maybe our armchair economist expertise, could solve the issue that is the Federal Reserve. Kind of disappointed in you, Ben. But no, you're right. Like, we're not going to solve these issues. We can just sit here and like just get me as angry as possible for the sake of making Pete Rizzo think that we do our jobs properly.
Nice.
Or like, we can maybe try to discern what they're saying versus what they actually mean. John, like, you brought up Alf's comment and we were DMing about that. Just this idea that what he's not saying, how carefully you're starting to see all of these different news headlines, all of the different verbiage that people in the political sphere are using. Like, hater or lover, Elizabeth Warren at least is the only Democrat who has the fucking balls to come out and say we're in a recession. So there's a very clear fear. And
Wait, sorry, who said that?
Elizabeth Warren.
Yeah,
Elizabeth
so-
Warren.
Okay, so
You know, P, my secret crush. which is not so secret anymore.
There you go. There you go. Yeah. So Q, I'm so glad that you brought this up because I wanted to go into it. Like, what is happening in terms of Elizabeth Warren's tweets and the kind of growing unrest and potentially breaking ranks around whether or not we're in a recession or not?
Well, I commented on this yesterday a little bit, but I think I would ask I think Ben was bringing up a really great point, and I would ask, Q and others, right? Like, because, like, okay, so we're in a recession. What do you want the Fed to do, and what do you want Congress to do? Is what I would ask, right? Because I keep hearing the Fed's going to screw this up, and what I really hear is depending on what outcome I'm okay with, right? If I'm okay with high inflation, then I want the Fed to keep printing. And I want the Fed, and I'm using, Bitcoin Twitter speak right now before I get beat up in the comments. But if I want to tackle inflation, and I recognize that we're going to need some deflationary, like, there might be a deflationary event, then maybe screwing it up would be, like pushing us into a recession and tightening lending and capital considerations going into a time where perhaps we should loosen them, right? Just in theory. And so my take on it is, like, I think that I would ask you guys, like, what do you want? What would you do if you were Jerome Powell? What would you do if you were Nancy Pelosi or Chuck Schumer? And, like, those are the things that I think are important to ask, because a lot of the answers I've heard all just tilt one problem in one direction, another problem in another direction. And I think that's where the more important thing to perhaps discuss is.
People are going to get really uncomfortable when I say this. First things first, if I was Nancy Pelosi, I would be doing exactly what she's doing. I'd be fucking buying all them NVIDIA calls and just fucking selling them off of whatever I tell the press. Nancy Pelosi has figured it out. If I was Nancy Pelosi, that is actually what I would do. She's the only one doing what I would do in her position of power. For everything else, and we touch on this a lot on this show. Ben, you even said the words that we don't have a free market. What should have fucking happened in 2008 is these banks that went too fucking far should have been allowed to fail. Oh, but the whole global economy. Cool. That was going to be our fucking reset, and we were going to learn from our mistakes. But guess what? Mommy and daddy, i.e. the Fed, came and bailed you the fuck out of jail, and you didn't learn the lesson because they got a really dope lawyer who told you what to say, and then boom. You got off with a fucking fine that mommy and daddy paid, and then you're off doing the same bullshit again. And so that's how we're where we are. So the uncomfortable truth, what I would have liked to do if I was Ben Bernanke, okay, let him fail. I also know if I'm what Ben Bernanke's thought process was, well, hey, shit, if I let these banks fail and then I'm done with my term as the Fed chairman, who's going to hire me to come talk to them? Who's going to pay me my 6-figure speaking fees other than the banks that only bring in the former Fed chairman to tell them what they want to hear? So the incentive structures there are so fucking corrupt that it allowed us to just almost put off what should have happened in 2007, 2008 to what we are now still trying to put off. It's time for us to just rip the Band-Aid off. And unfortunately, there are going to be casualties, and there will be. And
I don't think you know what that means, Q. I really the reality is like, so a couple of things. One, Bernanke didn't pass TARP, right? Congress did. And Hank Paulson came out with a one-pager famously on the White House steps and had a one-pager that was TARP, right? It was like, wait, how do you read 800 billion? And by the way, that was like under $800 billion, to put this in perspective. We've normalized $1 trillion here, $1 trillion there, just to put that in the take. But it still doesn't change the fact that Jerome Powell wasn't there then. Jerome Powell can't go back in a time machine. He's here now. And so I hear a lot of criticism of Jerome Powell, which, it's fair. But what would you have him do? Right? So he admits it's a recession. All it does is shake the markets. People get even more pissed off. More people are likely to lose their jobs. Oh, we want him to print further. Okay, well, that gives more license to the CPI running hotter, right? So like in a lot of ways, there's not really any good answers. There's consequences to any solutions here. And so, like, to me, for instance, like a lot of people want, or they're saying, hey, we want, if Elizabeth Warren's right and we're headed into recession, well, then what? Do you want them to pass another stimulus package and actually pump more money to the economy without solving these supply chains? And I just think there aren't necessarily good answers. And simplifying it to something like, hey, I agree. Like things we were dealing with decisions that were made 20 and 30 years ago. There's no doubt about it. But we are where we are now. Now what? And I think that's a much tougher and harder to have, conversation, especially on Bitcoin Twitter, if we're being honest.
I got to
But
jump
if
in
we-
on this. Q,
Please.
because there's two things. One, I definitely have to just 100% echo everything John said about, listen, when you do policies that are trying to respond to these things, you're benefiting some group at the expense of others, right? We're literally seeing that happen right now. Whatever that bill you had up on the screen in the last segment, it was like, we're going to give money to a bunch of people and other people aren't going to get it. That's it's redistributive. Maybe those people need I'm not commenting on whether it's good or bad. I'm just saying that's what those policies are. But to go back to the 2008 thing briefly, because listen, I could do probably an hour or two on this discussion, so I'm trying to make it really succinct. The problem that 2008 was, and this is what Snyder talks about all the time, and he doesn't say it this way, so I'm going to say it a different way. The problem that happened in 2008 is that we monetized the MBS securities. They became the money of the economy. So letting banks fail wouldn't have fucking fixed that problem, bro. Like, listen, the problem is fiat money is bad at being a medium of exchange, has poor verifiability, poor portability, and terrible store value. And we started monetizing MBS securities. Go watch The Big Short again. I'm not asking. I'm not saying this is a joke. Go watch the fucking movie again, okay? At the very end, when they still have their short positions open, right? And the MBSs aren't changing in price, right? It's like, why aren't they changing in price? People are defaulting their loans. Why? You want to know why? Because they were fucking hodling. The banks hodled the MBSs. They didn't trade. This is all in Snyder's work in the original Eurodollar University series, that these things have become money and they're not good money. That problem hasn't been fixed. It's still part of the problem that these assets are really part of our money supply. The only way to fix that was with Bitcoin. Let's bring it back, guys. The only way to fix that is with Bitcoin. So this concept that Joe and I talked about last time and John was talking about is, let's try to figure out a path where we can keep society from collapsing such that Bitcoin can get big enough to absorb these problems. That's the message I gave last time, and that's the message that's my opinion.
You're absolutely right. And John, you're also right that the jarringness of just letting this all collapse will have such a drastic effect that we can't even imagine some of the effects we'll have. 100%. Ben, the mistake you made is citing The Big Short, because I literally just finished the book yesterday.
Let's go.
So
Correct me
you are right.
I didn't know
Again,
you could read.
only
That's
halfway.
great.
You're right. Fuck you. Where you are right is, yes, these banks were hodling. These banks, the MBSs weren't going down. All of a sudden, it's looking like it just doesn't work. But there's one material issue, and that is the fact that the bond market is not a public market, and that it is a private market that the bankers do over the phone, and they dictate their own prices. So when their models were then telling them, like, no, I don't care that there are a couple of defaults, this bond that I hold is still a viable bond. It still has value. I'm not selling it for 70 cents on the dollar. Like, it fucking 100 cents on the dollar. Go fuck yourself. So that is a distinction. And that is what I really want to solve for first, because we can go into this Bitcoin standard and we can have a world where all we use is ultrasound money, and we can fix all of the
Do
mistakes.
not use that term. Ultrasound money is a scam term invented by Vitalik Buterin.
Sorry. Sound money, whatever.
What are
Not
you going
the
to tell
point.
me next? Code is law? Like, what's next?
Not the point I'm trying to make, guys. The point I'm trying to
computer.
make is we are only going to reintroduce the issues and mistakes we've made in the fiat system in a Bitcoin system, because human greed, human corruption, that is inherent. That is part of our biology.
I kind of disagree, Q, because that's
Yeah,
not
I
the
gotta
problem that I was
disagree.
mentioning. I was saying that the main problem, and I'll say it, I'm just going to literally say the exact same thing again, was that the assets, the money, the banks use as money, what banks use as money, the global financial system uses as money, isn't money. It's not dollars, it's not euro dollars, it's assets. And the reason they do that is because our money is a poor store of value. So we monetize those assets that are meant to be done other things. They have a specific utility. And this is so crucial to understand. That's what 2008 was, and that problem hasn't been fixed. And there's not really a way to fix that problem.
But do you think it's more assets, or do you think it's more debt? because most of these assets are held.
Look, I
through
think it's
debt
liquidity.
vehicles.
I think the best way to think about it is like liquidity to like quell volatility is effectively what it is. I don't disagree with your guys' points. I really don't, especially on this one, which is going to drive Q's brain crazy again. But I do think that like, there's still. So I think like as like if you remember the Big Short, since we're doing the Big Short, right? Like where I think this market is fixed is like when you look at the ratings agencies, right, and the conflict of interest that were there. But I do think the rest of it still is a market. Now, whether it's the right like way for the Fed to be involved and how much liquidity they should pump in and how much easing should happen. But I do think the limitations of like, and where like I want people to, again, I've brought it up over and over, like this doesn't affect the conversation from the Fed yesterday. The Fed wasn't talking about asset prices yesterday. The Fed's focus when they're mentioning 9.1% as it relates to CPI or 6.9% as it relates to PCE, personal consumption expenditure, like those don't really take into account the conversation we're having here. And I just I want to make sure people don't get lost. The other thing is there's one other point that I think was really worth mentioning. There's a guy named One's Compliment in the chat. I think he's added some really good value, but the one thing I would contend to that, and as it relates to this conversation, it only leaches out, Q or Ben, when the banks issue credit, right? So like that, all of the things that we're talking about right now, and if you look at charts since 2008, the banks haven't been lending at the same rates. In fact, that like, inherently our money is inflationary. We know they tell you they target 2% inflation, but they have not been able, they struggle to meet that. And that's because they depend on banks being able to lend. And it hasn't really been worth it for the banks to lend in the way that they have pre-GFC. And so like we still haven't fixed this problem in terms of actual real money supply in the way that maybe most Americans think of money, right? And the way where Ben, I think, is, to kind of bring it back to the conversation we're having here, like Ben, I agree. Like they don't really like, they have their own form of money, right? Like that's what these interbank tokens are with bank reserves, is like Jeff Snyder or Alpha, those guys kind of joke. And that really is like, I think, a function of a system that does only transition when you are not on a credit system, right? So like the world that we live in now is a credit-based system, and Bitcoin isn't big enough to take that over yet. Like I don't want Bitcoin to be the global base monetary system yet. Like it needs to be far bigger with far bigger tools, far larger stress tests. And it's like at $1 trillion, which is not even right now, that is literally not even like one drop of salt that it is into the world's credit markets. It's just not.
Yeah, so there's two main ways that we get inflation. If you're kind of following this conversation, it's this fiscal deficit, Congress spending money thing, and the other thing is banks creating money through loans. So the checks on those things are society as a whole voting for things, and this system of banks' willingness to lend and people's willingness to borrow. Those are the checks on the expansion of the money supply for the most part. So if you want to look at inflation from a monetary perspective, those are the things you should be looking at.
Yeah, what is the required reserve percentage right now? It's fucking 0%, right?
The reserves don't really matter because of this fact. So take what I just said. Okay, that banks' willingness to lend, right? I was saying that's the check, not reserves, because reserves used to matter when reserves were gold and money was paper against gold. Okay, and people actually took nobody. So Snyder goes over this in a recent What Bitcoin Did episode. Not to shout it out too much, sorry. But it's a good watch.
Great fucking podcast.
That he says that people don't ever. So banks operate on a system where they're relying on the claim for another bank's claim to possibly get fiat actual dollars if somebody actually demanded them. There's only 10%. It's like between 10 and 20% of the entire money supply in actual physical notes. So if we tried to do a bank run, we couldn't physically do it because there's none in the paper, right?
Yeah,
so
literally, it's like not possible.
Those are the checks on that reserve thing that you're trying to talk about. It has nothing to do with some fucking reserve ratio that the Fed dictates or whatever. It doesn't matter, right?
Wait.
There's no check on the expansion of the money supply because fiat money is so unverifiable, unportable, undivisible. Like, think about this. This is really the case.
Oh, no, I agree with you.
No matter at all.
I agree with you. It just blows my mind that banks literally do not have to keep any, like, what, it used to be like, oh, you give them $1 and then they manufacture, they just out of thin air, create $10 and they loan out 9. But that's like there's nothing now. So it's literally like a bank can just loan out infinity dollars. And to your point, the only thing that limits that is their own appetite for risk.
And people's appetite for taking.
Well, we know people have appetite for.
Yeah,
we know
exactly.
like
That's
the
the
problem
thing.
isn't the appetite of the people wanting to borrow
borrowers.
money, but the risk premium isn't there, right? So someone was referring
what
to
rate,
one,
right, John?
yeah, for sure. And like one's compliment is like telling me to learn about open market operations, which by the way, having spent a lot of time thinking about this, he's right. Like it's just so fucking crazy to think about. And like, it's not a very like, I don't know, tangible topic, I think in some ways, but there is the risk premium for banks to lend money doesn't make sense, right? Like with interest rates this low, like how much money do they make lending out money? And like when they're in certain situations, like you find that most people aren't really credit worthy. So one of the reasons that I'm less concerned about the housing market right now, to kind of take this back to like today's real world examples, is that we don't have like the same type of ninja loans that were happening, no income, no job approved loans that were taking place in 2007, right? Like the average credit rating of homeowners that are being approved is like 760 or something like that. Like I remember when even getting a loan for my home in like 2018, my wife's a doctor. I have, significant income, and like just going through the hoops for that, I was like, Jesus Christ, like, what do you do if you're, on the periphery? And so you can tell that like, we're in a different structure for like, a setup to kind of have a similar 2000, 2008, 2009. Like, I don't think it'll be a housing bubble that just pops. But what you're realizing is that ultimately it doesn't make sense for banks to lend. The risk premium just isn't there, and they can just go overnight into the repo market and get, a small yield and ultimately like continue on. And so I think like this is one of the things where people get lost, is that like the money supply really doesn't grow unless the two things that Ben, or the effective real money, as I think most people define money, only really expands when two things happen. It's when banks lend, and so they create a liability, but also those become deposits for that consumer who can go and start a business or go and pay employees or whatever, right? Buy a home. Or two, when we have, these like drunk sailors with pens in Congress basically printing $1 trillion every couple of weeks, apparently. And so like, unless those two things happen, we don't really get new money into the economy, which drives, I think, the underlying conversation that kind of driving the Fed speak and the amount of macro attention that's taken place in Bitcoin that I've not seen before. Like, I don't remember a bunch of Bitcoiners caring about the FOMC meetings, like, back in 16 or 17. But that doesn't, unless those two things happen, there's not more dollars at the grocery store competing over those same goods. They're just basically ledger money, as Ben talks about, transferring between ledgers on various banking, books. And that's the reality of it. Problem solved, Q.
So there, yeah.
I mean, my larger issue, like I agree with everything that has been said. I genuinely do. But my issue is not that, honestly, my issue is the accountability of it. My issue is the fact that these bankers went out over their fucking skis and they were taking advantage of the American consumer. And in turn, when they made poor investment decisions, and we need to look at it like that, they thought an investment in this individual buying this house or taking this loan or whatever was a viable thing. Because there was a point where bankers had to really calculate risk. They don't have to do that. And they still don't have to, because now they have this, for whatever fucking reason. And the reason is because TARP back in 2008 came and fucking bailed all of them out of the stupid decisions they made then. They run under this assumption now that, well, if we fuck up that badly, they'll just bail us out again.
He's not wrong, Ben. He's not wrong about this.
That is the cancer that needs to get out. And that only way I think we get rid of that is by letting them so gloriously fail. Otherwise, fractional reserve banking has been around for centuries, long before the dollar. And it will return long after the dollar if we don't try to really stamp it out. That's what I'm worried about. And that's where I'm focused on. And so we are having two different conversations about it. But that's just the point I want to hammer home.
Yeah, I mean, like John, I'll probably try to confuse you here and kind of agree with what you're saying, because to me, that conversation you just had is actually an end the Fed conversation, not penalize the banks. Because The Fed's implicit and explicit guarantees are what led to that risk taking. And I'll say it again for folks that aren't following along. The Fed, through Federal Deposit Insurance, through their willingness to recapitalize banks, right? This is ostensibly what the Fed was designed to do when it was created in 1913, was to prevent bank failures. Like literally, that was the whole precedent for it. So if you want to get rid of those malincentives, you want banks to actually worry about failing, you got to get rid of the Fed. So to me, that's just an end the Fed conversation. And
Cool.
That's a really politically unpopular thing to do because we think they're fixing inflation right now, right? So again, Bitcoin's the only way that you can fix that.
I mean, I think we're all on the same page. And the Fed, that is solution number one. Now the banks are really going to be stuck holding their own bags, and you're not going to see socialized losses and privatized gains anymore, the way we've seen, especially over the last 15 plus years. Now let's continue solving this issue of how do we get to that Bitcoin standard, that glorious world. All right, we have ended the Fed. That has been our decision here. I, as Jerome Powell, my last decree was, I'm going to I'm going to print $1 billion, buy $1 billion worth of Bitcoin, and then boom, I'm just going to burn the building down. I made that decision as Jerome Powell.
Wait, one thing I want to make clear to the audience, and Ben, John, please correct me here, but the Fed is not a governmental organization. It is a private organization. I mean, it was founded as a private organization, quasi-private.
Yeah, I agree with Ben. I mean, yeah, they're not elected officials, right? And you got like shares that are owned by private banks or whatever. But
yeah, but I mean, when it was founded,
the political. Yeah,
they called it the Fed to basically affinity scam everyone.
My favorite fact about when the Fed was.
I think that's a fair Bitcoin Twitterism that I'll agree with lightly.
All right. That's a nice way of saying, P, you're fucking wrong.
No, actually.
My favorite Fed fact of when it was founded was the fact that 6 men who controlled 1/6 of the total wealth in the world were the people that met and decided to form the Federal Reserve. So Tell me about corrupt incentives. It's them trying to just continue to hold their stranglehold on the global wealth that they have.
Yeah, if you haven't read The Creature from Jekyll Island, go read it. It's a fantastic book. I want to shift topics slightly just for a moment. So this actually came out earlier today, but I just saw it. Biden is, of course, in conversations with President Xi of China, and he said officially that he does not support a formal declaration of independence by Taiwan. That is fucking wild to me. Like, what the actual fuck? What world are we living in right now?
We're living in a world where we don't want to go into World War III.
I guess, man, but like Taiwan is the major manufacturing center for all of our 5 and 7 nanometer computer chips.
Yeah,
what the fuck?
I do have to say I do own and still hold shares of TSMC or TSM, but
great.
Are a bunch of people following your trades over here, Q, that we don't know?
No, we have been asked. We have been asked.
What are you guys doing?
No, but John, he's following the Pelosi index, and so we're following his. So
hey man, I saw a tweet from Unusual Whales where it listed it's pinned on the Unusual Whales account. I don't know who Austin Scott is or Austin Mack, but dude, I want that dude to run my portfolio so bad, man. Like, everyone is fired except for that guy. But no, I think so. P, you asked a really important question. I'm not some expert in Taiwan, but I will say this is one of the things where I want to see Congress act, right? Like, I'm not for all this types of intervention, but there are certain types of capital allocations that make sense to be able to move, in sort of like a national defense interest. So we should be manufacturing our own chips, right? And so the chips bill seems to be an incredibly bipartisan play, or at least it was it got sent over by the Senate. Congress seemed to like it. It seems like a very pragmatic piece of legislation. And yet we're in the political atmosphere in 2022 where even the most basic shit let's not depend on this little ass island that's controlled by this big ass country that could start World War III with us. And oh, by the way, everything we have in our lives has a chip in it. These are basic things, especially on the back end of seeing supply chain shocks of COVID, that I would love to see. This chips bill should get passed, and we should be domestically manufacturing our own fucking chips. Pardon. I hope I went silent on that word before you guys get in trouble. But the take on it is to me, as it relates to like, us as Americans, like, yeah, I'm not, some geopolitical expert, but it's obvious to me that this is a very, very, big threat to national defense and our economy if we can't get chips to power our economy.
I mean, I think it's really interesting because a lot of this is just posturing at this point. I was paying more attention, quite frankly, when you heard the rumblings of Russia possibly invading Ukraine. I was less concerned about how we handled the Ukraine of it all and more concerned about what is now the precedent, what is the message we send, because if we just say, all right, fuck it, you could take Ukraine, then in theory, Xi Jinping is going to say, all right, well, you let Putin take Ukraine, you should, in theory, also be letting me take Taiwan. And we've all talked about it. Everyone knows how important Taiwan is to the global chip markets. To emphasize this point, 50%. It is estimated that 50% of all chips that we use, your computer chips, your phone chips, that fucking dumbass smart refrigerator that you bought for some reason, your TV chip, everything, your cars, all of these things that have a microchip, a microprocessor, 50% of those chips are manufactured and made in Taiwan. Now, TSM, which I hold shares of proudly, opening a chip foundry in Arizona. It should open, I believe, in 2024 is the latest estimate of when that should open up. And a lot of this will help us, I think, navigate around the China-Taiwan issue. But let's be perfectly clear here. China is not going to just, oh, we now control Taiwan, but let's let Taiwan operate as such. No. The headache of the chip shortage that we've seen over the last 2 years, I've said crazier things on this show that have actually come to fruition. So I'm just going to say the most outlandish thing possible. But like, you could very well not see a new iPhone for a decade type of developments. This will be something that all of a sudden you have Russia and China, who have become the biggest allies of one another. Whether or not you want to accept it, whether or not you want to read those stories, that is becoming very, very true. Now you have one country that is a dominant influence of the global energy space, and now you have another country that is now controlling and being a dominant influence in the tech sector. John, I hate American interventionism personally. I am hard pressed to find an example over the last 50 years that it worked. I genuinely want an example of when it has worked in the last 50 years. But I do also agree with you that we can't just allow this to happen.
Well,
So
it's an issue of national, like, strategic priorities or strategic interests. Like, it takes a decade to build a new chip foundry. Chip foundries are the most advanced mechanical and computer-based things that we can build as humans to date. It takes, like, collectively hundreds of years of knowledge and PhDs and people that are there building this stuff. It takes years to create the systems, to manufacture the other systems and the tools. You literally have to, like, build everything on site. It's almost like installing a moon base. Like, you have to ship the raw materials, then you have to, like, build the tools that build the next step in the tooling, and then you have to use those tools to build the next step in the tooling, because it all has to be done in clean rooms and it requires massive expertise. So you can't just, like, scale up chip manufacturing, which is why there's so much interest in the United States in building chip foundries here and all in other areas in the world, because everybody understands that, like, China is going to invade Taiwan eventually and basically try to fuck over everybody else in order to maintain their own dominance, which that's their strategic right, I suppose, unless somebody else can oppose them. But it's wild to me that Biden is so clearly just saying, yeah, fucking go for it.
Well, I think what he's also sort of what I hear though, P, is that, like, I think he's trying to appease China and trying to say,
Exactly.
hey. So I think, like, if and listen, the guy's probably taking a nap right now, right? So, like, let's stay focused on the prize. But I do think that you need to, especially when you're fighting a war, effectively a proxy war on one front with Russia, Ukraine, trying to stir the hornet's nest with China could be really, really tricky, right? Like, so I don't, again, I'm not the political scientist here. I don't really know. But what I would say is that, like, if you could solve chip manufacturing domestically, and we could get some nuclear energy domestically, the amount of pressure that would take off of our, like, various, I don't know, political pressures across the world would be immense, right? Like, if we could get true, I mean, the reality is we could be truly energy independent with just our fossil fuels here, but it's just like, it's not going to make sense for a lot of oil executives moving into a world of like that we're moving into to make 10-year investments in certain pumps. But like, I do think that this chip thing is really, really, really tricky. We have a short window to figure this out. And we have a bill right now in Congress that should get passed, like, and it should be like something that everybody should be supportive of. And I don't care if that's money printing or not. Like, those are the types of things that is, like, to me, part of a war machine in a wartime, to be able to have domestic, independence over our chip manufacturing.
Yeah, I mean, the libertarian in me is going to be strangling the non-libertarian in me by saying that the investment in this chip facility in the United States, again, considering what P said, it takes 10 years and $100 billion to build one of these things. And sorry to Q's TSM bags, I think we just kind of need to do this thing, right? It's one of the few areas where it's like, again, all these policies, they benefit some groups at the expense of others, but we want to be able to have cars and iPhones and stuff. So I 100% agree, John.
It's
Why isn't
hilarious to
I
me
always
that there
get
are
the short
people.
end of the stick?
It's
I
I just
just-
there
I
are people
keep
who are. Oh,
Go ahead.
there's just some people
Q,
who
did
are
you
like,
guys know how much Ben and I liked each other before you invited us on to the same one?
I love. Also, Ben was like, I mean, I don't think I have anything to say. Like, what can I possibly talk about today? No, I was just gonna comment. Like, it's hilarious to me that there are people in the world who are like, I mean, wouldn't that be a good thing? I mean, like, aren't there too many cars? Aren't there too many machines? We got to get back to nature, bro. Like, let's embrace the animals and let's die hungry and starving en masse.
Microdosing. Yeah.
Yeah. Did you say microdosing?
Yeah.
No, I'm down with that.
Let's just microdose and just fade into that good night.
We're just
Let me
gonna
tell
all
you,
go hang
man,
out with Brandon Quittem and forage for mushrooms in the woods.
just
If this shit goes down, I want to be on Brandon Quittem's like survivor team or whatever, bug out team.
all I'm saying is 2 stems and a cap, and you're good.
Jesus.
Look, I do think though, like, let's talk about the intervention or how should the U.S. intervene here. Fun fact, if case you guys didn't know this, my stock mentor and person I essentially just trade off of, Nancy Pelosi,
Jesus.
not only was she often
Get a room already.
look, not only was she buying all these NVIDIA calls and her Intel stocks and all these other chip stocks, she also, her and her husband, soon to be ex-husband and soon to be my future mistress, Nancy Pelosi, they decided to take a short little vacay. Do you guys know where they went on vacation to?
Taiwan.
They did. Like, I'm not kidding. Joe Biden in the fucking White House had to literally call Nancy Pelosi and ask her to step down and not meet with chip manufacturers in Taiwan.
Q's just trying to pump his bags again, I think. Guys. I don't know.
Dude, it's so funny because I think I use the analogy is like somebody's like, oh, they were talking about the Fed curbing their conflict of interest rules and stuff and like trading rules. And like, do you think Congress will ever do that? I'm like, I don't know. Do you think Smeagol's going to give up the goddamn precious? Like,
Exactly.
And someone right now, I want to highlight to you guys, Nancy isn't even in the top 5. You guys got to go hire Crenshaw or Austin Mack. Stop looking for the 6th pick in the draft. Go to the top if you're going to get an inside trader, yo.
Hey man, Giannis Antetokounmpo was a number 14 overall pick. So
Oh man, dude,
you can
Austin
find
Mack
gems
is-
later in the draft.
The thing
No,
about that Austin Mack or Austin Scott character is he doubled up the next guy. He's twice his portfolio crushed, man.
Things,
The thing that drives me
things
crazy
in
here
a
is-
perfect world that if we lived in a perfect world, Congress would pass today and we would be done with certain things.
Well, they're gonna pass the bill. By the way, that's why she invested in it. Like that was your
Yeah,
signal.
exactly.
That the bill's
Yes.
getting
Like,
passed. So
fuck
there you go.
these people. I wouldn't care if it was like, look, here's the thing. I'm going to eat your lunch. I'm going to kill your children. I'm going to take everything that's yours. Let's fucking go. You're going to vote for me because you're an idiot. That would be fine with me.
But that's
it's never.
that, you just described Mitch McConnell. That is exactly.
No,
Like he will
no,
look
that is
you.
not true.
No, he will look you in the eye and tell you,
No,
"I'm
he
gonna
will
fuck
not.
you
I don't know
over."
where this shit comes from. He's like
a
like
turtle
fucking,
anyway.
Yeah, he's a fucking turtle monster
He's
like
not a
everybody
human.
else. He says whatever the fuck he wants to get the outcome that he wants. Again, I'm exaggerating what these people should say, but it's the duplicity that drives me fucking crazy. Like, obviously, everyone is going to do whatever is in their best interest. The thing that drives me fucking crazy is the narrative games that are played where people try to portray themselves as these fucking saints, and then they are just fucking everybody else over. It incenses me. It's insane.
Pete, do you remember during the COVID break, there were 4 senators or 5 senators that basically dumped all their stock. And then some of them even, I think,
Kelly
Richard Burr in
Loeffler.
North Carolina, Kelly Loeffler, Dianne Feinstein. This wasn't even a uniquely left or right thing. Like there was senators on both sides of the aisle, and it wasn't just that they dumped their stock, but they went and told their donors, right? They are caught telling their donors, "Hey, you're gonna want to dump your stock in a couple days here," right? Like, so I'm not shocked by any of this behavior. It's absolutely abhorrent, and it's something that definitely is not like we should tolerate. But on the other hand, here, like going back to the to your original question, T, about this Taiwanese stance, like I think what we should be doing is trying to be increasing our BATNA, and the way you do that is with energy policy. The way you do that is with ultimately securing chip manufacturing here, and you got to do that ASAP. And then you can take on a much different stance with China and Taiwan once we have those bases secured. But right now, they absolutely got you by the balls if they invade Taiwan. There's no doubt about it.
John, that sounds like what a status cuck would say.
Absolutely, yeah.
You piece of shit.
Choke it
Okay,
out.
Ben, armchair economist
wrong
over
one.
there. What are you gonna do? I want Ben to put on his armchair presidency hat on. Like, what are you gonna do?
Oh no, I agree with John. I just wanted to call him a status cuck.
Well, it takes one to know one. Ben and I actually have a certain pledges we say at the end of our comradic meetings here, man. So
Don't tell my libertarian Bitcoin friends. I'm actually.
I love the idea, Ben, of like an image of you with like a libertarian hat on, strangling your whatever you're. Yeah, exactly. Or maybe you're like jerking yourself off. I don't know how that works.
So
hey,
That's
hey,
late at
can
night, man.
can we check Q's temperature versus yesterday? Like, so Q, do you hate Jerome Powell more or less than you did yesterday?
Oh man.
To be honest, like I just feel sorry for the guy. Like
See?
I've-
He's your boy too.
I'm getting to a point with Powell, especially, where I actually think he's the stupidest person in the room, but doesn't know it because everyone sort of patted him on the back for so long. Been like, yo, dude, you're great. He's gotten participation trophy after participation trophy to the point where he has failed upwards. And all he does, like,
Wait, what?
let me finish
Yeah,
my point.
I'm not
Let me,
following this either.
let me
Okay,
finish my point.
let Q square the triangle here.
So Jerome Powell has less financial credibility or knowledge as far as education goes than I would argue anyone in this room, in this sort of thing right now. And specifically, I will do me. I majored in finance. That is literally my only qualifying factor. And I'm still more qualified to understand finance than someone who majored in political science, who was a merger and acquisition attorney for 2 years, whose boss got hired by the Treasury Department back in 92. And since then, he has been a government stooge. He has worked in the government for so long and has just, in my opinion, failed upwards to the point where he's a yes man, does what he is told, and that's all he has been doing. In 2018, Trump cried about the fact that the stock market went down because one or two of his fucking rich friends said, yo, fix this, I'm losing money. And what did they do? Powell pivoted. And Powell pivoted again in 2020, and Powell's about to pivot again. I'm going to make my call at the top of the year, if not at the very end of this year. We'll see them pivot again. And he is only going to do it not because he thinks that's the right thing to do. It's because the person who employs him is telling him, yo, do that. If you don't, you're out. And so I'm just at a point where like, I actually think he's so stupid, but just doesn't know it.
Well,
And I just feel sorry for him.
I'll just ignore the fact that you're a credentialist for a second, that you were worried only about his credentials. And then
This is like
I'll-
this is
I'll-
his
I'll-
main argument against fucking
I'll
Jerome Powell.
also point out that it's funny because I feel like we have it both ways sometimes when we criticize the Fed. It was like, well, it's this private institution, but then you just demonstrated how they're kind of beholden to political pressures and that they kind of
Totally.
have to cave that stuff. So I just think
But it's changed over time. When it was formed, it was private, but now it has become an office in which the president of the United States decides who leads that charge. That is a political
Yeah, but
enterprise.
to keep,
whether or
keep
not
in
why
mind
does
though,
that
like
matter?
Q to play that, but keep in mind in this particular instance, right? You had both guys who ran against each other appoint the same guy. So Trump fired Yellen, hired Powell. Biden, his political rival, kept Powell. So I agree with you that I feel bad for him in some regards, right? Like he's got no winning answers. He's got less losing answers if he gets it right, and he's got really most of his influence is how calm he is on FOMC press day, right? Like, so one other quick anecdote, Chris, if you can give me a collage of P's facial expressions during Q's last, dude, I will pay sats for that for sure. If you could do but not like a Dali, whatever journey, whatever version of it. Like I want the actual collage of P's face. But the thing about it is and this is why I've tried to ask it. Like, I am not some Powell apologist, but I've heard some really credible people, including someone we all respect here. Like Joe Carlasare thinks that Powell might be the best Fed chairman we've had in the last 20 years. Like, I think he's done a better job than Bernanke, arguably. And I think Alan Greenspan was sitting here telling you, well, we don't do money, right? And he was referring to the Eurodollar system back in 2002, back when I thought the Eurodollar system was just the Eurodollar pairing. And so I would just say, listen, I don't think the Fed's being asked to do a lot of things. Like I almost kind of was thinking of the analogy and it doesn't quite work, but it's like calling the guy who fixes the medical equipment and asking him to perform the surgery. It's just like this weird set of expectations from the Fed. Meanwhile, we want them to fix this and we want to stranglehold them, right? Like they actually just can't do much except for really calm markets and set interest rates. And by the way, the interest rates are getting rejected. Like this is the point that I think kind of gets left. Their biggest tool is interest rate control, right? Right. Acute. And look at what the 10 and 30 year are doing. Like look at what this, couple $100 trillion market's telling you. They're rejecting. They're calling Powell's bluff, and they're basically saying, "Hey, we expect you to cut rates as soon as next year." Like
for context, because we brought this up, not to interrupt you, John, the 10-year yield has fell all the way down to 2.687%.
Yep.
The Fed fund rate sits at 2.25 to 2.5%. That is absurd. That's not supposed to be that close and tight. And that is when we say the bond market is sending a message, that is literally the bond market saying, don't go any higher than this. Do not go higher than this amount. So that is what we mean. I want to clarify that point.
Sure.
You're right. I'm a cuck. I did use credentials to qualify myself, Ben. You're absolutely right. You want to know someone who has no credentials and is more qualified than me? Dylan LeClaire, Bitcoin Magazine Pro Team. Quick little plug for them, but
Wait.
I stand by what I said. I stand by what I said.
You
Jerome
claim
Powell's a
that
piece of
you are
shit.
more qualified.
I am more
to
qualified than
manage
Jerome
financial
Powell.
markets than Jerome
Yes.
Powell.
And
Yes,
the
I am.
rest of us, I think, as well.
Yes.
No. That's not what I was
We're
saying.
not
I
with
said,
him.
I'm not saying what I said was
Picturing Keith with
any
a
of
haircut
us
right
are
now.
more qualified than Jerome Powell, but I will only speak to myself and share my qualification factor.
That's not what I heard. I heard you say that the sunshine shines out of your asshole.
I also told you to sell at the top and buy at the bottom, but you wouldn't listen and you did the opposite. So
Ooh, that hurts, B.
I buy at all times, my friend.
That hurts.
okay. So for my Powell apologists below me, for my Joe Biden loving colleague next to me, where do we go from here? I will leave us with two questions that I would like everyone to answer. First, will there actually be another rate hike at all? Second, what is your definition of a recession?
Ooh. Listen, the definition is to me, it doesn't really matter like what the official definition or whatever. Like everybody has their own definition of recession, and it's clear we're seeing downtrend. If you continue to see downtrend, the recession deep, like I think we're already in the recession personally. How deep that's going to be, how horrible it's going to be for people, it depends on the Fed. I've always say this, and John hates me for this because I'm like, well, it depends on the Fed, right? It's like, what are they going to do? I mean, it's true in a way, but
it's not just John that hates you for that. It's also me.
Yeah, I know. But the second question is like, you can't avoid it. Again, gun to the head. Do they hike again? I think they will. And I think that could be something that breaks markets or it couldn't. But John, do we know like what's the market pricing in right now as far as the hikes go?
So I think the market, so what the Fed's telling you is that they're going to go to like 3.8 or 4 or something like that, right? And what the market's saying is you're not going to go above 2.8. But this is also looking out on the curve. If you look at the euro, what I find more interesting is if you look at the euro dollar future curve, what it's pricing in is the Fed. So the Fed's telling you it's going to hike all the way through next year. At least that's what they told you before. Yesterday, Powell said we're going to be data dependent. That's Fed speak for, we're happy to change if circumstances warrant it. But I think that the Eurodollar future curve is expecting them to be cutting as soon as next year, right? And that's basically the credit market calling the Fed's bluff. Yeah. And so I guess like yes, I expect the Fed to hike some more. I don't know if it's going to be 3/4 of a point, right? I think you're probably looking at 50 basis points or 25 basis points. And especially if you have a rally in equity markets, that's going to give them more license to do so. But I think the Fed, the old saying is the Fed keeps hiking until they break something. What I really think it means this time is the Fed keeps hiking until inflation is no longer the narrative that the world is focused on and the markets are focused on. There's like an adage of like bad news is good news in markets, right? Because the Fed put, right? Like the Fed will come in and save the day. And the irony with this like inflationary setting, right, which is one that we haven't dealt with in most of our lifetime, and certainly since the GFC, is that good news is good news and bad news is bad news as it relates to CPI at least, right? And so if you were to get CPI to come down, that would be interpreted as good news. And I think the markets would respond positively to the Fed taking control. I think you could make the argument that the pump yesterday was that the markets want to see the Fed tackle inflation. They want to see the Fed be serious about inflation. And so I would tell you to both your answers. I think the first question is yes, I think we're gonna see some more hikes. And two, I also agree that we're either in a recession or shortly thereafter entering a recession. But again, I really want to emphasize, I think this matters more for political considerations more than it matters for market considerations. This is a lagging indicator. Markets are forward looking. The reality is to sniff this out. So yeah, those are my thoughts on your two questions, and good chatting with you guys, man.
P, you have to answer these questions because you are such a macro economy expert.
Please repeat the question and use it in a sentence.
Part one of the question used in a sentence is, will there be a rate hike in the September Fed FOMC meeting? And the second part of the question is, what is your definition of a recession?
Interesting. I mean,
this
let's
also
be
goes
honest.
to prove that P does not listen to anything anyone else says on the show, because two people already answered this question.
It's not anyone. It's you, Q. I'm sorry. I just gotta. Oh God. I mean, I'm just gonna be pulling it out of my asshole, but I think, yeah, sure. They raise rates by 0.25% in September, and the definition of a recession is the technical one, which we've had for fucking generations. 2 quarters of negative GDP tells you exactly what it is. Any attempts to change that are just manipulations and trials and tribulations and buy Bitcoin.
So I will also answer the question that I asked to all of you, and I'm going to cheat and say that I'm looking at the Atlanta Fed market probability tracker, which is sending me a sign of 25 to 50 basis point rate hike. Something to that effect should happen. My definition of recession, and I say it in jest only because it's the only way I can actually say it But I'm dead fucking serious when I say a recession is only when you yourself have lost your job. And watch this White House press secretary get fired and then come out and make a statement saying, we're in a recession. Watch someone from this White House get fired and come out and be like, we're in a recession. And then it's literally, then I'm going to be confirmed in saying the definition of a recession is when you yourself lose your job, because that's the way they will paint it. So just something to think about. Stay humble, stack sats. Ben, where can everyone stay up to date with everything you're doing? Where can people find you?
Just at Mr. Cool BP on Twitter. Check out What the Fuck Happened in 1971, and I'll keep editing What Bitcoin Did videos.
John, where can everyone keep up to date with you and the awesome company that you launched that you're going to have to come back another time?
You guys want to follow me, but you guys can find me and harass me on Twitter at PayItForwardDad. Looking at my DMs, it looks like a few of you guys already are. I'm going to make Q reply to all of you as me, but no, I'm just kidding. Yeah, hit me up on Twitter or Telegram, PayItForwardDad.
I'll see you guys in Twitter Spaces. Ben, please respond to my DMs.
Yeah, we'll see.
Later, guys. See ya.
You guys are great.
It was a pleasure having you both. Thanks for jumping in.
We're going to jump to a commercial break, and then we're going to be joined by Jimmy Song. So stick around. And as always, use promo code BMLive to get 10% off of everything in the Bitcoin Magazine store, including the latest edition of the print magazine. We'll be back. Welcome back, and thank you for sticking through those commercial breaks. I am excited to introduce our guest now, Jimmy Song. Jimmy, how are you doing, my friend?
I am doing well. How are you
Oh,
guys?
you're muted.
Oh,
No. Oh, wait, no, there was lag. Ignore me. Jimmy, so I want to start with the question that I just ended the last segment with, because there seems to be no adults in the room that can give us an answer to this. But what is your definition of a recession?
a recession? I mean, it's I don't know. There's some technical definition, but I don't really care to think too much about it. It's whenever it's trying to measure how bad people are feeling. I think people feel pretty bad already, so I don't know.
Interesting.
And the thing is, like, it's funny because there's like a whole like history of this stuff. They used to have these things called panics, right? Like in the late 1800s, used to be called panics, and this would be when stock market would go into a bubble and then it would fall down, and they had like a whole bunch of them. And Herbert Hoover decided that that was like too loaded a term. So when in the 30s, there was that big stock market crash, he called it a depression as a way to avoid the term panic. Now, that depression, like lasted a really long time, and it also got a terrible, reputation. So, come, later, they started using another word, and it's now recession. So I have a feeling that they're gonna play these word games again and come up with something other than recession to describe, what's happening. But and they'll put some technical definition behind it and just say, we're not going to use the word recession, or we're going to define it away and use some other word that will last some amount of time until at some point people associate bad things with that word. And then, I think that's what's going to happen.
I actually appreciate that context because it helps us, I think, better understand that this playbook of moving the goalpost, changing the definition, and avoiding the word is actually something we've literally done 90 years ago. So I appreciate that context. While I may be in a panic and fury and give a shit about what goes on in the macro environment, what's been taking up your time? What is taking up your energy, and what are you focused on?
What's taking my energy? I just had a really long conversation with an altcoin podcast, and I just basically yelled at her for like an hour. So I still have a little bit of that energy of like just righteous indignation at like all things altcoin basically. And it's like, but what about the metaverse? Don't we want to get away from Facebook? I'm like, no, because I basically what you're doing isn't getting away from Facebook. It's just giving it to another company, and actually they don't have to deliver anything. So it's nothing like what you think it is. It's just like, what? Yeah, I think she realized she had a lot more homework to do. So it was an interesting conversation. So that, I had that call like right before here. I have another call after and a call after. So it's all afternoon is Jimmy in front of the screen over and over again.
I don't want to upset you, but I'm genuinely curious. Like, obviously, you're not a fan of the metaverse, but what was something beyond her metaverse comments that was just like so absurd that you hear not just from her but other altcoiners?
Yeah, it's this huge confusion around decentralization. She was like saying stuff like, it's not decentralized because some people own a lot of it. I'm like, that comes like straight from socialism. What makes you think that you like it should be distributed equally or something like that? Of course people are going to go into it. The amount that you have reflects both your wealth and your conviction in this asset. So it's there's a lot of like sort of hidden assumptions in questions like that, which you have to sort of unpack. And it was kind of fun trying to do that because ultimately I think it comes from like a place of Marx or socialism or communism or whatever, thinking that it's not fair because these people got in early. No, they got in early because they were convicted in it. There's lots of people that didn't, that have known about Bitcoin since 2011 still don't own any, like, Peter Schiff and other people. So it's, thinking about just sort of like how to frame things. Like the message that I keep coming back to is that, there's no need for a token in any of these projects. You could just use Bitcoin and do the project that way, but they keep adding tokens for the ostensible purposes of funding this project, but really ends up being just like suck money in from retail. And that's the unfortunate reality that we live in.
I mean, you've been around in this space and in this world much longer than I have, and one of the statements I continue to hear is like these bad ideas are not going to stop popping up, and it's more on us to sort of, us being Bitcoiners, to really try to not destroy is a little too aggressive, but really try to beat up and negate some of the bullshit claims that these bad ideas, these altcoins and shitcoins that pop up, continue to share. But ultimately, like they may never go away. So what is actually the solution here? Because at a certain point, we can't just keep driving ourselves crazy. Some people are just gonna get scammed. Some people want the easy solution. You talk to most people who invest more heavily in altcoins than Bitcoin, and you start to understand their values are rooted around, I want to get rich. And it's not an understanding of what actually money is. It's just this idea of, well, this guy got rich investing in some crypto, and so I'm going to do this. Where do you think the fault is in the hands of the people who make these things, or the fault is in the people who are going out and trying to buy these shit coins?
Yeah, I mean, it's a little of both, but I would place much more blame on the people creating these tokens and pretending that they're something that they're not. And it's they're like rent seekers to the nth degree because they don't create anything, and they collect lots of money, and they're being their own central bank and getting away with it, which is honestly rather sad. But this is kind of what's been happening in this space for quite a while, and like what can we do? And that's a really good question, because the argument keeps being made to me that really you should be a lot nicer, and you're turning off a lot of people with your attitude and stuff like that. And it's like, well, here's what's wrong with the frame that you're coming from, because essentially what you're saying is, if I were nicer, that if I somehow acted in a way that would make you feel more comfortable with Bitcoin, not because you verified it yourself, but because of my personality, then you're going about like financial investment all wrong. I don't want those people in Bitcoin, the people that come in just because I'm nice, because there are plenty of people that will be nice. In fact, there's lots of them right now. They would love to take your money by being nice to you and scam you out of your of whatever wealth you have. And
Mashinsky.
that's the sad. Yeah. And this is something that like their frame of reference is basically everything is political. And this is the article that I'm working on this week, which is that when you have fiat money, literally everything becomes political, and everyone thinks of everything in a political way. So what we're being told essentially is that you need more support for your coin. You need more people backing it, and what you really need to do is win over everybody that's out there, as if it's like a political vote or something like that. And the thing that I'm trying to convey is that that's not how the laws of economics work. It's not. It's tempting to think that it's just political, and whoever is in charge gets to make the rules, and that's it. But talk to any country that's experiencing hyperinflation. That's not how things work. People are going to find alternatives, because there are certain rules in economics, laws of economics, that are as hard as nails. They're like the laws of physics. People prefer to store value in things that won't degrade, right? And they prefer the most liquid asset rather than a less liquid one, if they're the same price and utility. So I mean, like there are things like that which I don't think people understand. They think money is just political and that's it. And what you need are is a lot of support. And my thing is that that's not money at all. What you want to do is make the argument that this is good money, and then let them go do whatever they want. Because if they're won over because of a political program, then they're just as likely to abandon you whenever the political winds change. And those are not the people that you want. And but that's how it works in politics, right? Where you have to get the support of everybody, and that's what gets you to win. Especially in a democracy where majority rules or whatever. um and this is a hard thing to sort of get people to really believe, because they don't want to believe it. They want to believe that the people in power have all of that control, and that they're comforted in to some degree that okay, well, if the Fed does this, or if the chairman does this, or the Treasury Secretary does this, then we'll be okay, and that it's really just a vote for prosperity or poverty, and it's really the fault of the opposition. That's not how it is. We've been spending way too much money, way more than we have. We've destroyed the manufacturing base and everything else, mostly because of fiat money, not because of a particular party or anything. And we've spent way too much on war and all this other stuff. So the debt that we have and the sort of situation we find ourselves in doesn't lend itself to just sort of like a political solution. Not that's not the problem that we have. And this is something that's difficult for a lot of people to hear, because what they want to hear is, hey, you vote for me and everything will be okay. Or you vote for, like they think like buying Bitcoin is like a vote for Bitcoin. And, if enough people get on board with Bitcoin, then everything will be okay. I mean, things will be much better under a Bitcoin standard, but it's not a political thing. It's not about getting enough people in so that we suddenly take over the world or whatever. That's inevitable if you study the laws of economics, unless something like 10x better comes along or something. Like that's something people have a difficult time understanding. It'd be like falling from a plane and thinking that by voting to not die when you fall, like that, or having a majority vote that you not die when you fall, that somehow that would save you. That's not how things work. Laws of physics just are a certain way. The laws of economics are a certain way. You don't need to like get a political majority. In fact, we're a tiny minority right now, and we're still able to make lots of waves and affect stuff. And that's really the big thing that we have to get people to see. Or I mean, the faster people see that, the better it'll be.
So let's maybe unpack this a little bit, because I think there's this notion, and we had this conversation with CK, and I know that he's going around banging this drum a lot, that most Bitcoiners are just not not bullish enough. And there's like this almost instinctive hedge. And like, I'll be honest with you, I prefer to be paid in fiat. I convert my fiat to Bitcoin based on sort of how I want to live my life. And I know that that's like, Jimmy, I might have like lost 10 points in your mind right now, and you may never respect me again, but that's just the God's honest truth from my perspective. That's not the case for everyone. Different people have sort of different systems that they have created, but that idea that I have even any fiat whatsoever, that is me being bearish. What is sort of your stance on this? How much is over exuberance? Like in a conversation I recently had with American Hodl, this idea that, plebs think that, oh, if I get my half a Bitcoin, then like I'm gonna have my castle in Europe and my beachfront property. Like what is over exuberance to the point of unrealistic versus what is actually like within the realm of possibility of how far reaching and how much this can encompass and grow into?
Yeah, I mean, I don't really have an answer for that. Because like this is sort of like society level change. Who knows what how things will shake out. What we do know is fixed supply, increasing demand. So what will you be able to buy at that point? Like I don't know. That's like one variable we don't know. We also don't know what you're gonna want at that point, right? Like this is something that we talk about a lot, is how Bitcoin changes you. Like you start wanting different things. You might have gotten in because you wanted like a Lambo or something, but eventually you realize, what, I don't really want a Lambo. Like your low time preference behavior sort of mindset like changes what you want too. So how much is enough? I don't know. They're like two variables that are sort of like changing at the same time. And where do they meet, right? Like what's possible for you to get with Bitcoin is, or what's going to make you happy or whatever. Like that's really the question. And I think what will make us happy as we go into a lower time preference mindset will require less sort of immediate gratification. But at the same time, like the prices of everything will fall in terms of Bitcoin, and they're kind of related, because the more Bitcoiners there are, and especially for those of us that have been in it for a while, yeah, you're not impulsively spending anymore, right? Like, or if you do, it's like for a small amount. You're not like going out and getting a new car because you're feeling depressed or something. Like that's not what you tend to do once you've been in Bitcoin for a while. So enough of that, and prices start to lower for that reason too. So it's I don't know what's realistic, and I don't know what will satisfy you either. But both those things are sort of in flux.
That's fair. I do think there is a degree in which we have to take ownership over what it is we want. But at the same time, I think we have been so heavily influenced by our culture and by our decisions that, like, most people have just lost that line of who it is they actually are. What are the things they value and need versus what are the things that you watch TV and you're like, well, that looks dope. I want that. Mind you, I watched Johnny Tsunami when I was what, 4 years old, and since then, snowboarding has been my fucking identity. I stand by it and I love it. um, I want to get a sense from you, Jimmy, of, like, we've started to see some of these quote unquote heroes in the Bitcoin space really fall. Just today, now you have Pomp coming out and saying that his Better Business show is no more. Um, I'm curious if you think that there's still more of this sort of, I want to phrase this very carefully. Is there going to be more capitulation of these quote unquote Bitcoin heroes before we see a new run up, or do you think we've started to finish the purge?
Uh, that's a good question. But I will say though that in bear markets, it's very hard to be just a pure influencer, which unfortunately a lot of these people are. Like the thing that you need to do as a quote unquote influencer is, your expertise is in marketing, right? Like that's how you make your money. And the thing is, there it's always going to be more lucrative to market in the altcoin sphere than in Bitcoin, because there's no pre-mined tokens or anything like that for you to go and grab. And you're living a lot more honestly, I think, in Bitcoin, and a lot more fraudulently in altcoins. But let's face it, you're going to make more money doing it in altcoins. That seems to be what's happening with a lot of these influencers, where it's getting painful. They've sort of established a cred in Bitcoin, but then as things are getting worse, they're finding that, like, the Bitcoin sponsors aren't really there, or they're starting to cut back. So they're getting increasingly desperate because they've gotten used to a certain amount of income and stuff. And this is where you start to fall and start going altcoin or whatever. Now, I mean, the people that have quote unquote fallen, I think, have always had a little bit of that altcoin streak the entire time. And there's a reason, I think. I remember talking to Tone Vays a while back, and he got into the space in 2013, and he was like, basically, if you are non-technical and a Bitcoin, and like a Bitcoin influencer in 2013, he was like, every single one of them went to an altcoin. Every single one, like, among the non-technical people. And he at the time he said, well, Trace Mayer was the one exception, and of course we know what happened to Trace. So like there's something about like having marketing as your expertise, which doesn't lend itself to staying, a Bitcoin maximalist for that long, because it's just too easy to be tempted by something else. And this honestly is what happened to Roger Ver, thinking that you're the reason for a lot of Bitcoin success and that you deserve more. You get into sort of maybe an entitlement mindset of thinking, well, I have all these followers and I do all this stuff, and I should get paid more for what I do. And honestly, that's been the story of a lot of these people. They grow a following in Bitcoin, and then they'll go do an altcoin, and then they'll make a bunch of money defrauding people. I mean, I don't necessarily I don't necessarily think that's gonna be the model going forward, because I think people are starting to wise up. But I kind of get what's happening. It's all the incentives are off because of all these altcoins that continue to have, I mean, they have a lot of money in their treasury and they're able to use it.
If you'll entertain me, we pulled up on the screen a comment by Yellow where I don't know if this is a true story or not, but did you and Tone just go at it with Roger Ver?
Mm-hmm.
And like,
well, so
share
I
that
was
story?
on the I mean that was like the weirdest conference I went to in my life. But it was a Mediterranean cruise that left from Barcelona, and I was asked to speak at it. I'm like, cruise maybe, and they're like, yeah, these other people are coming. I'm like, okay, well, if you want some ratings or whatever, or something that people talk about, put me and Roger on stage and we'll have a debate. They were like, oh, great idea. And they got Roger Ver to agree, and it was going to be me and him and all that. And I wanted just like a Lincoln Douglas debate, like just, okay, make your points and then go and then make your points. And of course, Roger didn't prepare anything. I told him about all this. I said it multiple times, and I prepared like a 6-page dossier of all the points I was going to make. I posted it on Medium shortly after. He just didn't prepare anything, so he basically didn't say much other than, I don't know, just random like diatribes that didn't make any sense. So I mean, towards the end, it just became sort of like evident he wasn't going to say anything or actually make actual arguments. He was just going to go on a diatribe. So I left, and Tone took over, and they did some more. It made the I think the Daily Mail ended up writing about it. And there's like multiple videos of that on YouTube. So, and I published exactly what I said and what I prepared on Medium. So it's not like there's anything there to hide. But yeah, that was a really weird conference. I also met John McAfee at that time on that cruise. It was like such a strange cruise because nobody knew like who's Coinsbank that's putting this on. It's like some Russian outfit or something. It's like, and did anyone actually pay to come on the cruise? Because it was like so many people that got on for free. I'm like, what's going on? And of course, there were the Ukrainian models that were there, which was very weird because, like, you go to a Bitcoin conference, you don't see that many women, period, right? And on this one, there was like clearly like 30 women that were very attractive that were wearing kind of skimpy outfits. And being a cruise, there were a bunch of people that brought their wives and girlfriends, and they were like pissed off that who are these women? And they didn't even speak English, and it was just very strange. And somebody told me they saw these women just like board the cruise like all together at once, like right before it left. So it was really sketchy. Yeah, and that's that was the cruise. I gotta say though that was good for me because I didn't want to have anything to do with what was going on. That was just it was the place was just sort of like very hedonistic. You know, with the kind of people that were on there. So I was like, you know, I'm not into any of this stuff. I'm a family man. I have a wife and kids. I'm just gonna stay in my room and eat steak, you know, for dinner. That's it. So what I did was I locked myself in the room, ordered coffee and tea every like hour or so, and I sat there and wrote Programming Bitcoin. I think I did like 5 chapters in those 3 days where I didn't go to anything. I just sat there and wrote. And, you know, like the only thing that I showed up for was what I was contractually obligated to do, which was the debate with Roger Ver. Did that, and that was it. Yeah. So that's my story.
I just found the Daily Mail article, which I posted in the comments. I was, while you were telling the story, I found like pictures and the video as well. And just seeing the way this stage is in front of a fucking pool and you trying to tell Roger, like, sit down. Like, what are you doing? Sit down. This is,
Yeah.
honestly, I know what I'm watching tonight. That is, oh my God, Yellow, you are disgusting. But also, like, I think it's beautiful that, you know, in a shitty situation, like you put in the work and you gave the universe Programming Bitcoin, which has been instrumental in countless people's journey into this space and learning how to further develop and build off of it. Um, to come back full circle now, I want to know, and like maybe let's just do a little bit of a lightning round here. Some of these questions I know the answers to, so just entertain me, please. I'm going to throw maybe a word or a phrase out at you and tell me if it belongs or should be incorporated into Bitcoin in any way. And the easy one to start with is NFTs.
No.
Do they have a place in Bitcoin? No.
No. I mean, it's weird because like people like bring up NFTs with me as if they're something brand new. And I'm like, dude, I coded this in 2013. We had it on Bitcoin in 2013. It's a color coin. I was a color coins developer. I made this, and I knew then that it was like, you know, it could be just a digital thing, in which case it's completely useless, or it can represent something in the real world, in which case you run into the Oracle problem. So either way, it doesn't work. And I concluded that way back when. But people make it out to be, oh, you know, it's this new innovation, blah, blah, blah. And didn't it start in Bitcoin? I'm like, yeah, I was one of the people that made it. It's and I came to the conclusion that it's really stupid. So yeah, you know, that's something that people think is something really cool and innovative. It boggles the mind how much of a reality distortion field VCs and marketers are able to pull over the public.
Anytime anyone tries to show me their NFT, I try to take a screenshot of it. I've gotten punched a couple of times, and honestly, I just laugh. The next one for you are, you know, an altcoin built on top of Bitcoin. Is that anything that we need, do you think?
No, I mean, what are you using it for? Like, the question always is like when somebody describes to me a project as, hey, like you know, we're gonna do this. I'm like, great, okay. Why do you need a token? Why aren't you using, you know, dollars or Bitcoin? Why do you need the token? Oh, it's the fund. No. That's a different issue. If you're expecting people to give you a donation, like you're basically trying to print your own money. That's a whole separate thing. Then, like, and I've never gotten a satisfactory answer for any of that. Never ends up being anything. So yeah, I don't see a reason for altcoins on Bitcoin or elsewhere.
Rather than altcoin, I'm curious your thoughts on a stablecoin built on top of Bitcoin.
So I wrote a tweet a while back. I think stablecoins are poorly implemented Xiaomi and eCash. So if you know what Xiaomi and eCash is, this is what Fedimint is like sort of taking advantage of. This is David Chang came up with this, I think, in like 1981 or something like that, which actually wasn't too far away from like the discovery of asymmetric cryptography. Diffie-Hellman, I think, wrote their paper in like 1976 or 70. I forget, in the mid 70s somewhere, and like 6-7 years later, he came up with this eCash concept, and that's basically you have a central entity, but you have privacy for the customer. So instead of checks going all over the place and the bank knows exactly where you spent the money and who spent what or whatever, instead of having that log stay with the bank, instead you get essentially eCash and you can spend it or whatever, and you still have to trust the central entity, but ultimately you get privacy around it. And that's how I see stable coins, or at least back stable coins. Algorithmic stable coins are a complete like disaster, and we saw what happened with Luna, for example. But Xiaomi and eCash is a useful concept, and you get all of these privacy properties and so on. I think that's ultimately what a back stable coin is. It's Xiaomi and eCash, except you're unnecessarily putting it into a Bitcoin blockchain or some other blockchain, which I get. It's sort of like a Dino thing, but they want to be able to say that it's quote unquote decentralized, but you have an issuer of the token. You have somebody that's in control of or whatever. Really, what they should be doing is issuing Xiaomi and eCash, and then go from there. But probably from a regulatory perspective, it's more advantageous to call it like a stable coin with a blockchain or something like that. But it's just a poorly implemented eCash. I think eCash would be way better because you get way more privacy and there's no blockchain necessary. You just have a history of receipts for a particular coin or the eCash that you have, and then you can redeem it for the actual dollars. I mean, that's how it should work. And really, that's what Tether and USDC and all these other back dollar instruments is you have a central issuer, and people are trading it, and then like somebody gets to redeem or whatever. Xiaomi and eCash, and it's superior because of all of the privacy properties that you get out of it. It's crazy to me that this the stable coin thing is being touted as like something that needs to happen on a blockchain or on top of some blockchain network. It doesn't. It absolutely does not.
I want to build off of that before we go on to the next one. But from the sounds of it, it almost feels like you would agree that allowing some sort of a Bitcoin standard where you could issue money on top of Bitcoin that was potentially redeemable if not for whatever token you want to issue on top of Bitcoin or for the Bitcoin itself. But at least there's this accountability, because unlike in our current banking systems where a bank can just tell you they got $1 million, wink, wink, when like they may only have 100K in the vaults, they can't really do that with Bitcoin. The UTXO, in theory, should be able to be traced back to them, and we would be able to see like, hey, you're issuing more than you actually have. This doesn't work. Do you think something like that, where the global banking systems or countries, if we still have those in this next iteration of society, were to say, hey, we hold X number of Bitcoin and we are going to issue Y number of our currency on top of it that is pegged and backed by Bitcoin? Is that something that is necessary, will happen? What are your thoughts on that type of a scenario?
I don't really see. I don't know. I mean, it's an interesting question, because I think what you're really asking is about scalability, and how much centralized entities will be relied on for that sort of thing. I mean, I I don't know. I think you get to be your own bank with Bitcoin, and that's a major feature. But who knows how the market will do it?
Let me rephrase it. Rather than like, will this happen? Is this a necessary thing? Would it be necessary to have that invention created on top?
I mean, you already have proof of reserves and things like that. So that already exists. And I think Kraken's shows that every once in a while. I know Obi's old exchange CoinFloor did that on a regular basis. So yeah, I mean it already exists and it already kind of happens. But I don't know if these exchanges will necessarily implement them. I think most of them don't because they like the privacy of not letting the public markets know how much Bitcoin they have and so on. So, yeah.
Not financial advice, but get your Bitcoin off of exchanges. May or may not be a Bitcoin bank run one day. The next one I had for you was sidechains. How necessary is this in the Bitcoin ecosystem?
I don't think it's necessary, but I mean, yeah, I don't think it's necessary, and we haven't really found the way to do it in a decentralized way. That's kind of the problem. We, if it was actually decentralized, then I think we would work. There would be some value, especially like because you don't have the you're not writing to the main chain, but the decentralization is actually kind of a critical thing. Otherwise, if it's not decentralized, then why do you need a sidechain? Just be the central entity or whatever. So it's kind of a weird mixture. If you can do sidechains with with decentralization, then maybe that would work. But if you can't, then I am not really sure I see the point. But regardless, I don't know if it's necessary.
I'm only saying this, and I swear to fucking God, Yellow, if you're teeing me up to look like an asshole, I will find you. What about Web3 apps that don't need a token?
Yeah, it's called Web 5, right? Or whatever. There's already sort of like a decentralized ecosystem kind of brewing on top of Lightning, and you don't need a token. I think they're showing that, and that this is actually how you make like a decentralized thing. BitTorrent, I think, was like an early example of how to do that at the digital level, in the digital sphere. But yeah, I mean, I think we'll see more of it. But whether there's enough of an appetite to make it like a sustainable business, I don't know. That's an open question.
All right. What is your opinion on Paleo's Keat?
You mean Paolo?
Paolo, yes, thank you. I don't know.
I haven't looked into it too much. I did talk to him about it, and he told me it's really cool, and you can do like video calls over a decentralized in sort of like a decentralized way, so directly peer to peer, which I think would be good. Yeah, hard to say because I haven't played with it or anything yet.
Is there anything that you're actually excited about keeping an eye on as it's being developed? You brought up Udi. They had Fedimints come out recently. Is there any sort of development layer 2 or above that you're like, this is something people should be paying more attention to, but they're not?
I think OB will be very upset at you that you called it
Udi. I'm an asshole. I'm such an asshole. My bad.
Wrong people and wrong
one letter makes
vowels.
A big difference.
Well, it's two. UDI versus OBI. So yeah.
It's one
Uh,
letter.
2. O and
Oh,
O
D.
versus U, and
Wow,
then D versus B. Like you
I'm
just
gonna
got
go
it
just
wrong, dude.
dig my ditch down there. So
I mean, Fediment is interesting, and I think I'll have to study it a little more. And I did just record a podcast with them, which will probably go out next week. So there's that. Yeah, I would say that a lot of the developments are around some of the apps that are being built on top of Lightning. For me, that's like what L3 is, right? The layer 3 stuff. And I'd like to see more of that happen, and we'll see where it goes.
is there anything that you want to tell the creators of to stop making? And you are well within your right to just spend this time telling Vitalik to go jump in the same ditch that I'm going to jump into once we finish this stream.
I mean, a lot of the entire altcoin space and a lot of central banks and their money printing, I would like for them to all stop. But I mean, they're not going to, because the system's set up in a way to benefit them hugely at the expense of everybody else. It's going to take a lot more moral outrage from the right people in order to stop them.
Jimmy, before we wrap up here, do you want to tease a little bit of what you're working on next? What we should be keeping an eye on?
Well, it's an article on politics and how everything's become political. I kind of mentioned it a little bit before, and yeah, everything has become political, and everything is looked at through a political sphere, as if you can sort of change reality by voting for it, and it's kind of gone like to a degree that I don't think any of us could have imagined even 20 years ago. But yeah, I mean, people are saying, all of X is a construct and Y is a construct or whatever. And that's just causing people to live in more fantasy and not reality. And, and we get craziness like we've had recently. So that's what I'm going to write about. I've started putting together some ideas, but I haven't finished the draft yet. So I have to put it in future tense what I'm actually going to do. So
You hear that, Pete Rizzo? The article's coming. Just be patient. Without giving away anything in the article, like what was the one topic that you're like, this is so stupid that it's now become a political issue? And I'm also a little hurt that what you're implying is that my vote doesn't matter.
Your vote doesn't matter. It really doesn't.
Since when?
No, I mean, it matters in a block. Once you have like 10,000 people or something like that, you can affect some stuff, especially if you live close to each other and are in the same voting district. Of course, it's going to matter. But like any particular individual, it's your vote matters only to the degree that you can influence other people to vote in the same direction. So, yeah, hard to say. What politically sort of like motivated me, but I would say like the last couple of years, just all the different things that have been going on, and just studying this stuff, noticing just how political everything is. Like, your typical job is largely political, and we make fun of the Soviet Union for the political agent or something. Like everything had to have like a political guy, right? Like even like a battalion of soldiers, you had like a political officer with everything, right? Like they in a sense, like our current situation is everyone's like both a political officer and like an employee at the same time. You're not really ever allowed to get away from politics, at least in a normal corporate job. And that's the case in almost every community and stuff. It's this feeling that if you get a majority, you can do anything you want, including, subvert the laws of the universe, which is impossible. But that's how people are thinking, that majority is God and that's it. So yeah, there's something about that I really want to dig into and explore and write about.
Well, people hate how much I actually enjoy just the drama that is the U.S. political system. So I cannot wait for that. I have a weird thing that just came across my Twitter feed that I kind of want to just share with you. Um, Ethereum breaking news that Ethereum developers have announced a merge date for the Goerli testnet, August 6th through the 12th. This is the last step before the merge. I mean, this feels irrelevant. Let me put it like this. What are the odds that you would put on A, the Ethereum merge even happening, and B, how relevant is this? Is this just more spin by the Ethereum contingency to make it seem like they're moving things forward?
Yeah, I have no idea. Maybe they'll actually release something, and I'm sure they'll run in. I mean, it's like any software engineering project. You're gonna have to test stuff and find things that break and blah blah blah. The thing is, their project's so complicated. I mean, I imagine the testing phase is gonna take way longer than they probably think. But whatever the case, once they do switch to proof of stake, if they ever switch to proof of stake, then I think it'll be relevant for Bitcoin in that the proof of stake stuff versus proof of work, that's going to take on another, level of discourse or like loudness and marketing and stuff like that. And we're probably going to get attacked at the regulator level that proof of work is wasting electricity or whatever. And yeah, I fully expect that to become a narrative in the next, after they do that, because this is what they've been wanting to do. And this is something that Vitalik's been talking about from the very beginning. And yeah, I can't wait for that fight. I expect that fight to actually really separate the two. And because at that point, like, altcoins have been trying to ride Bitcoin's coattails forever. And with something like this, I think it puts a clear separation, and maybe puts a lot more daylight between Bitcoin and altcoins. And if that happens, then great. I think Bitcoin, will take on this enemy, and this is what's in the history of Bitcoin. Whenever Bitcoin has vanquished an enemy, it tends to go up in price by a significant amount. So that's what I would expect.
I look forward to meeting you on the battlefield when we finally get to destroy all of the bullshit ETH FUD that somehow impacts Bitcoin in any way. Jimmy, where can people stay up to date with what you're doing? Where can people find your interview with OB? Where can people know what you're cooking up next?
Yeah, pay attention to my Twitter at Jimmy Song and my newsletter, jimmysong.substack.com. Between those two things, I announce everything. My interview with OB will come out next Thursday, probably. And yeah, the one that I released today was with Anna Chakovich, who's part of the Anti-Corruption Foundation. She works with Alexei Navalny, the main opposition leader, who's in prison right now in Russia. So that was in itself interesting. But yeah, the OB one with Fediment, that's coming out next week. And we talked about a lot of stuff. So yeah, hopefully you guys enjoy it.
Thank you so much, Jimmy, for joining us. Be sure to give him a follow. Be sure you follow myself, P, Chris, and the Video Bitcoin Twitter account. Please make sure you also unfollow CK Snark for the sake of our fun little internal bet. I'm going to just wrap here. Have a good one. We'll be back tomorrow for news and notes, guys.